And we're back to kick off the early careerist pitch competition. Please welcome to the stage our master of ceremonies, Suraj Hinduja.
Good afternoon, good afternoon, good afternoon. Welcome back, everyone. I'm going to be also be the one that's going to bring the voice down. Awesome. Well, welcome back, everyone. I hope everyone had a great lunch and feels energized because the second half of She Has a Deal pitch competition is sure to keep the momentum going and inspire us all. Now, as you remember, we kicked off the morning with our Powerhouse Today's Women segment, and now we pivot to our next wave of hospitality leaders, the dynamic, brilliant, and ambitious early careerists. The early careerists pitching today are college students. This cohort represents the next generation of hotel owners and developers. Now, while they might not be in a position to close on a deal yet, each one has identified a real investment opportunity from their market as a part of their journey into hotel real estate. This segment brings fresh eyes, fresh energy, and the innovative ideas we need for the future of our industry. And now, with a new set of expert judges joining us for this segment, the excitement continues. Now, same format. Each team will have 15 minutes to pitch, followed by a 10-minute Q&A with our judges. After our judges ask their questions, we will turn to the audience to ask one question. So please remember to listen carefully and take your notes. As another reminder, the contestants will be evaluated on 5 key criteria. Number 1, competitive advantage, how they plan to deliver value to their investors. Number 2, market analysis, their understanding of the market in which the hotel operates. Number 3, due diligence, how they've confirmed the deal's feasibility. Number 4, projected return on investment. And number 5, performance, how effectively they have presented and responded to the questions. And like with our first part, the grand prize, a $50,000 equity investment from the Shad Momentum Fund. A powerful, powerful first step into turning these big ideas into bold action. Now, let's meet our esteemed career judges, leaders from Marriott, IHG, Rockbridge, Wyndham, and Peachtree. First in our lineup is Taylor Allen, Director of Acquisitions at Rockbridge and a coworker of mine, and Lauren Graff. Taylor is an investment powerhouse who brings nearly a decade of expertise in hotel real estate and a sharp, sharp eye for identifying high-impact opportunities. Next up is Michael Bernath, Senior Vice President at Peachtree Hospitality Group, a hospitality deal maker whose 18-year career has shaped billions in hotel investments and positioned him as a leader in acquisitions and strategy. Joining us next is Alec Mokel, the Regional Vice President of Luxury and Lifestyle Development at IHG Hotels and Resorts, where he leads all aspects of IHG's hotel development process across the Northeast and Mid-Atlantic. With over a decade at IHG leading transformative developments, Alex has become a key architect of the brand's upscale and lifestyle growth strategy. Brian Parker joins us from Wyndham Hotels and Resorts as Senior Vice President of Franchise Sales and Development, where he leads the strategic growth of some of the company's most iconic brands. With more than 30 years in the business, he is a seasoned leader known for building high-performing teams and trusted partnerships. And finally, Jenna Jacobson, Vice President of Luxury and Mixed-Use Development at Marriott, brings a powerhouse mix of legal, private equity, and hospitality expertise to scaling some of the world's most prestigious brands. Her sharp legal mind and real estate savvy have expanded luxury brands like the St. Regis, Ritz-Carlton, and Bulgari hotels across premier markets. Let's give our judges a big round of applause. And now to welcome back to the stage, the Executive Director of She Has a Deal, Shanika Thurman. "41 days, 51 days, 7 hours. We were joking earlier this morning, this is Shanika's first She Has a Deal, but it's also like her first 50-some days on the job, and we've been counting. How's it going so far?
You tell me.
It's great. Excellent.
Right. Thank you so much, and thanks to all of you, and welcome back, everybody. I'm looking forward to all of the good energy that everybody's bringing into the room. Let's give it up one more time for our today's woman contestants. And our inspiring, we're our phenomenal She Did It panel. Just like with today's woman, our early careerists have been preparing for months, all while they're managing school, they're managing their families, and they did it. I'm excited for you to experience their vision. They've poured so much hard work, creativity, strategic thinking into each and every one of their pitches. And remember, at the heart of She Has a Deal's mission is the SHAD Momentum Fund. This fund is a fund that bridges and it connects the critical capital that these women need to bring their hotel pitches to life. Every pitch you see today has the potential to receive not only just your applause, but a real investment. If you believe in the power of these women and the future that they're building, please take action. Join us in supporting the SHAD Momentum Fund by scanning the QR code or visiting investwithshad.com to get started. I would love to see at least one phone up in the air to scan the QR code.
I see a couple.
Even shared with your friends. Your contribution can really make a real difference. Together, we can change the face of ownership and create a lasting impact. And if you're not ready to invest, please consider sharing this opportunity with someone who might be. Okay.
All right, thank you, Shanika. Now, we're going to go backstage, but before we do that, the rules remain the same. And always, after each pitch, Thejal, who's backstage, will catch up with the presenters. And so let's give it up for our amazing backstage host, Thejal Patel, a proud member of the first inaugural SHAD cohort. Thejal, the floor is all yours.
Awesome, thanks, Suraj. Everyone, welcome back. I know it's after lunch, but I'm gonna need y'all to wake back up and get hyped for our early careerists. Just another friendly reminder that you have to vote twice. You have to vote after each pitch, and then you'll vote later on at the end for the Viewer's Choice Award, which we'll announce later on. Also, another reminder, we have some fabulous prizes courtesy of our sponsors that we'll be raffling away, and I'll be announcing those raffle winners after each pitch as well. So make sure that you quickly rate your best team or your favorite team, and just increase your chances of winning. So back to you, Suraj.
Awesome. Thank you, Thejal. All right, let's go ahead and get into it. We are very excited to begin our early career segment with Legacy Collection by KB from Howard University.
Together we are Legacy Connections by KB. We actually knew each other before becoming team members, but we definitely got closer throughout the deal. And just kind of learning like her aspirations.
20 years down the road, I hope to have my own hotels and have my own portfolio. And hopefully by then I'm opening up the doors for other young Black professionals and Black women to come into this industry.
My North Star goal is to kind of have my own hotel brand. I want to create a hotel model that really invests in the economies that they're seeing. Tourism really has the power to uplift economies if done right.
Since joining SHAD, I've changed because it has made me a more confident person, especially when it comes to pitches and things of that nature.
I would say I got so much more confident in data and numbers.
For a long time, I thought of hospitality more at the operations level, but to hear another Black woman say that she wants to expose us to hotel ownership and other Black people who own hotels, that really drew curiosity to me.
Success isn't just how much I can go, it's about how much people I can come with me in the ladder up to the penthouse in the future.
Please welcome Katie Edwards and Brooklyn Tucker.
You know? Well, good afternoon, everybody. everybody. My name is Brooklyn Tucker.
And my name is Kaden Edwards, and we are
Legacy Collection by KB.
Today we are honored to represent the illustrious Howard University and excited to share with you a project that we've been working hard on, representing our dedication, passion, and pride in this property.
Here at Legacy Collection, we have a mission to uncover the hidden values in our property, transforming them into spaces that celebrates and truly celebrates in the stories of the communities that they're in.
We believe in creating purposeful, memorable, and unique experiences that leave a lasting impact on our customers and the neighborhoods that we serve.
So today, we're going to take you on a journey of a property that we feel does just that. We're going to be taking you through our market, as well as strategies for success, and how we plan to put money in our investors' pockets. Now, first things first, Kaden, where is our property located?
The New Orleans market is truly one of a kind, with 50% of hotel rooms classified as upper upscale and luxury, and 60% are independently owned. On top of that, New Orleans attracts over 17 million visitors annually and hosts over 130 plus major events yearly. It's without a doubt that New Orleans remains a top destination.
It's also home to one of the top 10 convention cities, and as well as business and domestic travel is expected to grow year after year. With a strong market performance of occupancy rate just under 65%, ADR coming in at $219, and RevPAR at $141, this is such a hot market, and we found just the right property.
1630 Canal Street is a 6-story building with 216 keys and spans 108,000 square feet.
It also has a 125-car parking garage, 3 bars, and a restaurant. And that's not all. It's also filled with history. It was built in 1963 as the first motor hotel in the area, called the Governor House Motor Hotel. Then it was also added to the National Register of National Historical Places in 2016.
So it's more than just a building. It's a historical gem deeply rooted in the community. Everyone seems to have a memory here, from graduation parties to wedding nights to wild Mardi Gras celebrations. It's the perfect property for our vision.
But let's not get too ahead of ourselves. The property did close in 2005 due to Hurricane Katrina, and then briefly reopened but closed down permanently in 2009. And since then, it's been closed with only major renovations being built in 2016.
The good news is a steel frame and concrete structure, basically a blank canvas, and it has major potential. But let's not get too ahead of ourselves. We have to make sure that this property can generate enough demand.
And it can. Located in the biomedical district of New Orleans, it's front and center of everything. I'm talking a mile away from the French Quarter, 1.5 miles away from major events and places such as the Caesars Superdome, the Smoothie King Arena, Ernest Convention Center, and Harris Casino. Best part, it's right en route for a Mardi Gras parade. That means our guests can throw beats straight from their hotel rooms. And on top of that, it's in the heart of all things Jazz Fest and Essence Fest, and these events bring over $1 billion of economic impact every single year.
With Tulane University's $600 million redevelopment of its historic charity hospital, as well as their continued investment in the surrounding area, it is bringing a vibrant hub for growth for this community. In addition, our property is entering the market at a strategic time, making sure we're taking full advantage of New Orleans urban revival.
Now, let's get into what everyone's thinking. How much is this going to cost us? Currently, it's listed at $11.2 million. However, we are strongly that we can negotiate it down to $9.5, even as low as $8 million, as the seller is really eager to sell.
Renovations will be our biggest cost. We estimate $43.1 million, and we also accounted for a 20% cushion for contingency, bringing our total to $56.6 million to completely transform this property.
I don't know about you guys, but I see the potential of this deal, and I'm excited to introduce to you guys our plan for the revamp of this beloved property. Now introducing The Governor, a legacy reimagined on Canal Street. Our vision is for a French Quarter revival-style hotel that honors the original charm of the Governor House Motor Hotel with enhanced with modern amenities for today's travelers.
We plan to keep our attached parking garage to generate extra income, and we will renovate this area first to bring in additional revenue during our renovation period. In addition, we will be having our updated outdoor rooftop pool to provide guests with a relaxing space and also showcase the city views. Our existing amenities, such as the restaurant and 3 bars, will be transformed into authentic New Orleans experiences for both our guests and customers to enjoy. And our 2 multi-purpose event spaces will host meetings, private parties, product launches, and community events. We also will be adding on additional amenities, such as the gym and marketplace.
Now, Our plan is to have the governor be the top destination for everything from live entertainment to social gatherings. In order to accomplish this, we really want to partner with local artists as well as local event organizers in order to be the social hub. We want to be the place that not only visitors go to, but as well as locals as well. This is not just a hotel. This is the place to be. It's the place where memories are going to be made, and as well as the New Orleans culture comes to life.
We are dedicated to embracing the rich culture of New Orleans by sourcing local products from local businesses in the community to include in our marketplace. In addition, we are keen on hiring top local talent, offering competitive pay, great benefits, and opportunities for growth, making sure that we're forming a team that can deliver on the New Orleans warm hospitality that they're known for. As well as our food and beverage program will highlight the city's culinary scene by showcasing limited partnerships with local chefs in the community to create an outstanding experience.
Now, let's talk branding. Our goal is to brand this hotel as a lifestyle brand that can honor the historic elements while also leveraging a major brand for demand. Right now, we are planning to position it as the governor under Merit Tribute portfolio. However, we are also open to other options such as the Unbound Collection by Hyatt, Hilton's Curio Collection, and Kimpton Hotels by IHG, as these all align with our vision and as well as allow for creative flexibility.
When it came to choosing a management company, we wanted to make sure that they understood the characteristics of our property and can deliver on our vision. We chose H&R Hospitality. They're based in New Orleans and have experience working with lifestyle boutique historic hotels. They also have a strength in adaptive reuse projects, and they also have a strong food and beverage track record, which is essential to the success of our property.
Some of the standout properties they manage includes the Eliza Jane, the Holston House in Nashville, and the Henry Howard Hotel.
To estimate our construction and renovation costs, we used the HVS and Namer 2024 cost estimating guide. This helped us make informed calculations for our upper upscale hotel, making sure we were including costs such as our 3 bars, our restaurant, and also our parking garage. Listed under other are common upper upscale add-ons, pre-function costs, and pre-construction costs such as roof renovations, cleaning, and also rodent extermination as well. We also make sure to account for tariffs with our 20% contingency, bringing our total to $43.1 million. And we also decided to work with Landis Construction as they have a deep experience working with historic preservation and renovation hotels. Some notable projects that they have worked on are Hotel Monteleone and Harrah's Casino.
Now, here we're looking at our competitive set. These are all the hotels we use as a baseline when putting together our financial projections. These include the Higgins Hotel, the Curio Collection, and the Jung, just to name a few. Now, here we're looking at our ADR projections to the overall market. The goal is to position the Governor as not only a hotel that competes with the broader market, but eventually outperforms it.
In our first year, we expect our ADR projections to align with the market as we establish our presence. However, we do anticipate significant increase as we enhance our brand awareness, improve guest experience, and also capitalize on our food and beverage and entertainment offerings.
Our market analysis and demand drivers indicate that the Governor is well positioned to capture and sustain this growth trajectory. Now, let's take a look at our financial projections. Here we're looking at our financial projections for the next 10 years.
We predict steady revenue growth year over year, and by year 5, we hope to stabilize revenue as we build our market presence and also improve on operations. On the NOI side, we hope to have a gradual climb as we become more efficient and more profitable, and in the early years, we will focus on investing in our brand positioning.
Now, one of the biggest advantage of this hotel is the availability of historic tax credits and financial incentives, which will significantly reduce costs. To do this, we're going to partner with a consultant like Crescent Growth Capital to make sure we really capitalize on this opportunity. So here we have our federal historic tax credits, which are 20% renovation costs, saving around $7 million. We have our Louisiana state historic tax credits, around 25%, saving just under $9 million. And then we also want to take advantage of the new market tax credits. So what does this mean? This means that we have to partner with a community development entity, such as Sankofa, that has existing funds, and then we're going to pitch the economic impact that the Governor will have on the surrounding community. And from there, we'll just negotiate the deals of this term to really take advantage of this opportunity.
So beyond tax credit, we also qualify for a restoration tax abatement, which will freeze our property taxes for 5 years, helping us to reduce operating costs. In total, our incentives come out to $31 million in savings, making the Governor a financially compelling and attractive investment opportunity.
Now, Like it can get any better. The governor is also in the opportunity zone. So what does that mean? That means investors can delay taxes on capital gains if they invest until 2026. Then it gets even better because if investors stay in our deal for 10 years, they'll pay 0 capital net gain taxes on any profits for this investment. So if you're an investor, I'm looking at you, Ms. Tracy, and I'm also looking at you guys as judges that are looking to save on taxes while growing your money, the governor is for you. So let's take a look at how this affects our cap stack. Here we're looking at our cap stack, and we're going to use $15 million of our tax credits. This is kind of on the low end, but we wanted to be very conservative when putting this into our capital structure, as we know this is a riskier deal. Then from there, we want to use $5 million of EB-5 financing. So that gets us access to lower cost capital while also making a path for citizenship for our international investors. Then we have our common equity, which is our investors, and the $50,000 me and Kaden will put in if we were to win this competition. And then, so that puts our total cap stack at $26 million for equity, or 45%.
We plan to take out a senior loan of $31.6 million with a 9% interest rate, completely avoiding junior loans altogether. And in year 5, we plan to refinance as we stabilize cash flow and enhance our investor returns.
Now, this is our exit strategy. As I mentioned, this is a long-term investment, and we're looking to exit at year 10, just so we can get the full benefits from the deal with the OZ zones, while also making sure that we're able to generate that cash year over year. With that being said, in year 10, we're looking at an occupancy rate of 76%, ADRs are $276, and RevPAR of $211. Now, usually hotels in this market trade between 6 to 9% cap rate. So we're going to use an 8% cap rate as well as a year 10 NOI of $5.9 million, giving us an exit valuation of $75 million.
Looking at our year 10 performance metrics, we expect exceptional investor returns with an internal rate of return of 19.18%, a 1.93 MOIC, an average cash on cash return of 3.94%, and total average annual cash on cash return of 19.30%.
So, the Governor is more than a hotel. It's a legacy project that revamps a historic property and strengthens a local economy.
With a prime location, strong brand positioning, and high projected returns, the Governor is a rare opportunity to invest in a transformative hospitality asset in the heart of New Orleans.
We're excited to bring this vision to life and partner with SHU on this amazing journey.
My name is Kaden.
And my name is Brooklyn.
And we are Legacy Collection.
Collection.
Thank you.
Awesome. Congratulations, Kaden, Brooklyn. Great job. Great job. All right. Well, you could just feel the energy in the room there. My gosh. You feel good? Jitters are gone? Okay. All the espresso jitters are gone? Okay, great. All right. Let's turn to our judges. Judges, questions. There's a couple mics here, and then we'll just jump around. Okay, Taylor.
Great job, ladies. Really enjoyed your presentation. I wanted to go to kind of how you started your presentation about saying the market has about 50% upper scale, independent, boutique, luxury product. Did you do a thorough comparison of how this property will play into those other competitor properties, and if this was the right segment to be in, given the amount of product already existing in the market, how you're going to make yourself stand out and achieve your pro forma?
Yes, we did, because at first, over 60% of the market is independent hotels. So we were thinking we could go the independent route. However, because it is a lot of supply in this market, we wanted to leverage that major brand to make sure we get that more demand, especially with the Marriott as Bonvoy points and all that good stuff. Then when it comes on how we want to compete, that's why we really wanted to focus on our food and beverage and social gathering. That way we have visitors coming to our hotel that aren't just being there for that bedroom. They're also going in to see the local artists play, to have a quinceañera in one of our rooms. So we wanted to make sure we really capitalize on more than just our occupancy rate, so that way we can bring in demand. Then from there, as Kaden mentioned when she was doing the historic, everyone wants to see something happen with this property. And I'll kind of let Kaden take over there.
Yes, we actually searched on the social media platforms, and we actually came across an older post about the building, and everyone was having just comments raving about their past memories in there and how they've had wedding nights and how they visited family members. So we really are looking forward to bring this property back to life.
Okay. Ryan.
First question: What year are you guys in school? That was impressive. That was very impressive. I want to know what year you were. Let's start with.
We're both in our third year, so juniors at the moment.
Juniors?
Yes.
Incredible job. going from a closed hotel to an upscale boutique, soft branded, and I'm not sure over what timeline you guys had for the renovation, to penetrating the market at the level that you're talking about or you're projecting, that's going to be a tall task to do that, which is going to require a lot of investment. So what thought have you guys given into, like, from a PR perspective, from a marketing perspective, like how are you going to introduce the governor this product in that market, going from closed to penetrating the market at the level that you're expecting? Have you given thought to that?
Yeah, I can start off. I would say like one of the big advantages from just me and Kaden, we really understand the power of social media marketing, word of mouth, and then all these good things. And we want to make sure that we generate the hype while we're in renovation periods. People are going to see it. It's going to be under renovations for 2 years as the Mardi Gras parades are happening. So that means that's excellent PR right there to get people to knowing that something's coming here, something's happening. And also the building already has a bunch of engagement. It was just on the news talking about when is something's going to happen with this hotel. They really want something to happen to this building. So we think that's also going to bring a bunch of organic marketing. Then once we get it, that's why we really want to partner with the local event organizers, as well as local artists, and as well as and the local chefs as well, because they bring in their own people coming in to come to the hotels to enjoy those amenities as well. So that's why we really wanted to make a full circle approach, especially with the community aspect, so we can really just be the hub of everything social and be the place to be when you come to New Orleans.
And just a second, we really just to emphasize we want to bring the community into it, so that will help us with the marketing side, and also with our garage during our renovation period that will be in use. So people are becoming aware that this is a property that is coming to the community soon.
Great.
Excellent job. It was really exciting to see your presentation, so nice work. On your exit assumptions, you have in there a 76% occupancy rate, and on an earlier slide you shared the market's currently at a 64% occupancy rate. Can you talk to us about how you think you're getting there? Is it a market-driven shift, or is it your property is going to outperform, or some sort of combination?
I would say it's a combination, because 65%, that's for the market as a whole. However, when we were looking at our competitive sets, we realized that this number isn't really that much out of the park. Right now, with our competitive sets, they're sitting around 70 to 73% occupancy rate, especially within those years of Mardi Gras season, how demands go up. So it's always something happening. And then when we look 10 years from now, we're going to be well established, well known. So then that's why we use that 76%. And then we even we felt like we could even went higher a little bit, but then we did want to stay a little bit conservative to be a little bit more realistic with the 76%. And then so honestly, I think we did pretty I think it's pretty calm, honestly, because I had the same question. I was like, this seems a little high. But then after looking at it and then doing a lot of sensitivity analysis and everything like that, we really realized that this is a reasonable number. And then honestly, if we were going to go at this deal, we want to go at it hard. So we're going to go into this deal with the expectation that we're going to reach those numbers by year 10.
Great.
That was an incredible presentation. So congratulations on getting
Thank
up here.
you. Thank you.
Putting yourself out there. It's amazing. The biggest question that I would have is specific to the structural integrity of the asset. Obviously, it had been closed post-hurricane. In the past 20 years, we've had numerous more activity in terms of climate change, et cetera. There was a slide and a mention that referenced a 2016 renovation. Have you guys put thought, budget, allocation? I know there's several line items that you guys have outlined, but the structural engineering, the integrity of the building, and what that may or may not uncover in your feasibility and due diligence.
So yes, we did make sure to account for that, also within our 20% contingency as well. And then when it comes, you're talking specifically about the hurricanes, right?
Just, the bones of the building to allow for development. Reinvestment into the hotel, or is the concrete impaired? Is the steel impaired? There's the ultimate core real estate that needs to be a substance for what you all will be contemplating, and that's a fundamental question in terms of the inherent real estate and what you're frankly buying, and then value creation thereafter.
Yeah, so earlier in the presentation, Brooklyn did mention how they did have heavy maintenance conducted in 2016. Yes, those were some years ago, but in our 20% contingency, we did make sure to account for that too by adding that on, because we understand that this property actually needs a lot of work.
And then also, just to kind of piggyback off of it, Kaden, when she was doing the construction costs, she did see that like roofing was one of the major things that we want to be done. So she actually made sure to really make sure we included that in our construction costs to make sure that we actually like put a lot of money allocated to that part. Because as you said, the steel structure is pretty much just like there, it's the roofing that will be the biggest like cost and the biggest thing. So we did make sure to account for that when we're doing the construction costs. And then we also overestimated on all of our numbers to make sure, because for one, it is up there. For two, like you said, it is a big project, just to make sure that even if we have a hiccup, we can get over it.
Yes, and we account for all high prices, no average or low prices.
Great.
Again, incredibly charismatic, fantastic presentation. I think your going in cost per key is roughly $270,000 a door. At that 8 cap at exit, what does that play out to from a cost per key perspective?
So upon exit, it will be a lot higher than what we started off with. I don't have the exact number to you, but I can get that number to you later.
Okay, great.
Awesome. All right, we had some great questions from our judges. What about from our audience? Yes, Crystal. Go ahead.
Well, terrific presentation, first of all. I saw that you have a license to MOIC for a 10-year hold period. How are you going to convince your investors to invest with the less than 2 time?
So a big thing about this, because we are in the redevelopment stages for the first 3 years of our project, that means that there's going to be no revenue coming in. So that does affect our like MOIC and our cash on cash, because you're not going to be seeing those returns to the end. So this is for our investors. This is a long-term project where in the beginning there's not going to be there's going to be no revenue being generated other than our parking garage, which is really just offsetting the original cost. So that means it is really high off on the later end, so it does make the numbers look a little bit skewed. But when you like when you look at the actual what we're doing with the property, it actually becomes a really big high return at the end of the deal, especially upon when we sell, especially as we start generating revenues from the years 3 to 10.
And just being honest, we're just being honest up front that yes, that we understand that this is a long-term investment, but if you stay in it in the long run, you will see returns.
All right, awesome. Another big round of applause. All right, ladies, you can head on backstage. Great job. You know, they're like 30 years in college, and there's no way I could have done that. I don't want to think about, nor do I want to share what I was doing my 3rd year in college, and so it's remarkable to see this. Now, as a reminder, we've got the QR codes up here for everyone in the room, and tuning in online, it's time to rate the pitch. You'll scan the QR code, and as a reminder, your vote goes towards 5% of the overall final score, and then every time you vote, you get entered into a raffle. And I've been talking about this raffle for a long time, and people are probably like, when's this raffle happening, Suraj? That's a great question. It's happening right now. So it is time for our first raffle moment. We're going to skip that, actually, and we're going to head backstage to Thajal to talk to KB Hospitality. Thajal, stage is all yours.
All right, thanks so much. Is it on? It's on. All right. Thanks again so much. Ladies, good job. Congrats.
Thank you.
Y'all are the first team or the first contestants for the early careers segment for today. How are y'all feeling?
I'm feeling good. I'm feeling pretty good about how we presented today, and hopefully that pays off.
Yes, no, I'm really proud of Kaden. Like, I think we did it. Let me just we did it, guys.
You want to give us some push-ups?
I can do the push-ups.
She was doing push-ups backstage, y'all.
I love that. Okay. Well, amazing. So one of the most incredible things about participating in the She Has the Deal experience is that you are connected with coaches and advisors. So who was that, I guess, advisory team for you or your coach, and what do you think about them?
We love Miss Monica and Miss Ebony. Big shout out to you guys. They are the perfect coaches for us. I couldn't say anything.
Yeah, and I'll say they kept it real and kept us on task, because it took us we were going between a lot of deals, because we were like, do we want to go the easier route or do we want to go the more harder route? And they kind of pushed us to go out of our comfort zone to do what's harder but with high reward. And they kept us on task. They told us, y'all need to lock in, y'all need to have it done by this.
Y'all got a week.
Yeah. So that was very helpful, especially as college students when you have so much other things going on, having somebody to keep you on track.
they definitely kept you in check.
Yeah.
And it's not easy to be juggling, school and then family, friends, all that, and then, have this entire side education process. So, but congratulations, ladies. I look forward to hanging out with you all at the reception. And everyone, please don't forget, as Suraj mentioned, please make sure that you are rating all the pitches. And starting in the next round, we'll actually be announcing the winners. If you are here physically in the room, then after all the pitches are done, you can claim your prize at the registration desk. And then if you're joining virtually and you won, then we'll reach out to you personally to get your prize to you. And I'll remind you guys about this again along the way. But next, here are some words for our next sponsor, Marriott.
Founded nearly 100 years ago, Marriott International's culture of putting people first goes back to our earliest days. Today, our development strategy remains firmly rooted in our values. Our commitment to owners and franchisees has never wavered, and together, we've grown globally. You benefit from market availability and development opportunities, while guests experience more choices from a diverse and innovative portfolio of brands. Our brands and product types offer you flexible options for any market. Whether new build, conversions, adaptive reuse, all-inclusive, or residential projects. From day one, you benefit from access to high-value guests through the world's most celebrated loyalty program and to Marriott's powerful sales and marketing engines that maximize hotel revenue from leisure, business, and group customer segments. Our unmatched global scale creates efficiencies and cost savings for you. And our ability to attract top talent, combined with our training programs, optimizes operations and drives industry-leading performance. From breaking ground to opening and operating your hotel, Marriott is with you every step of the way. By gaining more power today and driving more value tomorrow. Together, we will own the future.
Welcome back to Shad Talk. Ladies, can I just say I'm so grateful for our sponsorship partners. So grateful for them. Okay, so the energy, whoa, the energy, like, is anyone ready to do some push-ups?
Right, I am.
So it reminds me of one of our alums sitting at the table with me, Emma Claire Springs. She had a lot of energy when she came out, was it 2021?
2021.
Yeah, the winner. We have two winners, two SHaD alum winners at the table with me today. Emma Claire Spring won the Early Careers competition in 2021. Jessie Glassmeyer won the Today's Woman competition in 2022.
That's right.
And we have Teresa you were in the competition.
I was in the competition. Season 4.
Okay, so ladies, that was a lot. That was a lot. Like the bravado of the women in this competition is so impressive because I would have never thought about doing a hotel that big this early in my career. But I love the fact that they're dreaming big and thinking about doing those things. I think I'll start with Emma Claire Spring because she's our Marriott development professional here. And I think they said tribute?
Yes, tribute portfolio.
I mean, what do you think? Is it feasible for this particular project in that particular market?
I definitely think the kind of asset lends itself to a soft brand. There's just so much history with that asset, so I think there's the ability to create a really cool brand narrative there. And like they said, the local community, there's just so much history. I think my only question is, have they talked to Marriott Development yet to see if the brand is available in the market? There are 2 tribute portfolio hotels already, so I think from an AOP, area of protection standpoint, the brand is available, but it's more just, can the market take another tribute? The great thing about a soft brand is that every hotel is unique. They have their own name, and every hotel really feels very, very different from one another versus a hard brand, so I think that is helpful there, but that's just something I'd recommend. And then also, by talking to the brand, they might be able to get a little bit of key money, which always helps. So I'd recommend that.
Jessie, numbers, y'all, because there was a lot of numbers being thrown around, and the judges were asking questions about the feasibility, and I think there was a question in the audience about the MOIC, and
yes,
like
a lot of numbers.
A lot of numbers being thrown out there, but
this deal is certainly complicated. I was interested to hear a little bit about the comp set. You know, one of the judges had called out that the occupancy projection appears to be greater than the market. But one thing that really piqued my interest was that tax credit.
yes.
And so I think that's obviously such a benefit of this deal, and yet at the same time could be a hurdle that they need to really educate potential investors. I think this deal sounds amazing, but before I would put any money in, I really need to understand how that tax credit works and what that means for the deal and my investment overall.
Yeah, anytime you can line the capital stack with some tax credits or any kind of free money, and then you couple that with the opportunity zone, no tax at the back, because I do not like capital gains tax. Right. Teresa, what are you thinking?
For me, I like the tax credit as well as an investor, especially with this type of deal. You'll get, I would call it old money. and if you can save on that, and then if they can use like 1031s and those type of things to save on those taxes.
What's the old money?
Old money, you know, it's generational wealth transfers. It's coming up. So, you know, as they transfer their wealth, they transferring their wealth to their younger generation. So this is pretty much one of those deals that someone, family office would look at or something like that. And one of the things that I liked about it, other than that, is that they are leveraging the garage, because in that area, especially when they have big events, people like to park. If they live in the city, they want to come in. And during these 3 years, they actually will generate some revenue while they're doing renovations. So I thought that was a good
That's a
way.
great point, and that was in their model. I don't know if I heard it in their pitch, but that's an important point, Teresa.
Yeah. And McClare, what do you think about those numbers?
I think the numbers look good. One thing I did notice, their reservation system cost in the rooms expense category, there was nothing there. So I think that's something they'll want to factor into their overall rooms expenses. What is the cost of customer acquisition, whether that's through OTAs, even through the Marriott Bonvoy system, there is a percentage that you have to pay for Bonvoy folios. So I do think that'll be something they'll want to look at, just to make sure they're properly accounting for that cost of customer.
Those franchise fees. I used to think it was just 6%, 4% marketing, and then it's a lot more than that.
A little bit.
But
It's worth it, though. It's worth it.
It's worth it. The value's there.
Okay.
Well, I'm just happy to see Howard University participating in SHaDPitch this year. We have 2 Howard University teams, so quite excited to have them. And a shout out to Amari Head for bringing those 2 teams together. So I'm just going to end with HU. No.
Awesome. Great. Thank you, Tracy, and the Shad Talk table. Up next from Michigan State University, it's Evergreen Capital.
Hi, I'm Veronica Wu, the CEO of Evergreen Capital from Michigan State University. I have always been very passionate about real estate, and I've been very eager to make an impact on the communities by real estate. I think it was such a perfect opportunity for me, because She Has a Deal is all about education and empowerment, women empowerment and inspiration. My parents are in real estate, and so I was kind of exposed to real estate since I was small, going to different hotels and watching beautifully designed houses, or whether it's developing the finished model or looking at different architectural designs for our projects. I've never bored of that, and I'm just so passionate about that. Now my goal is not just to succeed personally, but to actively create pathways for other people who are aspiring women leaders in real estate. I am really grateful for the opportunity to be able to participate in SHAD, not just because of the practical knowledge that I was able to learn, but especially because of the meaningful relationships that I was able to build.
Get ready for an inspiring journey into a sustainable Fort Lauderdale hotel conversion project. Please welcome the visionary behind Evergreen Capital, Veronica Vu.
All right. Ladies and gentlemen, welcome to one of the most exciting investment opportunities in South Florida. We're talking about the Holiday Inn Fort Lauderdale Airport, an asset ready for transformation through a Delta by Marriott conversion. My name is Phuong Vu, CEO of Evergreen Capital, and proudly a rising senior at Michigan State University with a double major in finance and economics and a minor in real estate. Here's a roadmap for today. First of all, we'll kick things off with the investment summary. We'll then go into why Hollywood and Fort Lauderdale are such a great market to be entering, then dive into the conversion plan, then financial overview, and end things off with the investment strategy and risk assessment. So let's begin. Diving into the investment summary. The purchase price is $19 million. Renovation costs, including contingency, totals $8.25 million or $55,000 per key, as confirmed by Marriott. The closing costs are under $2 million, bringing the total project cost to just under $30 million, or less than $200,000 per key, which is very efficient and very attractive. And regarding returns, we're projecting an impressive levered IR of more than 26%, an outstanding equity multiples of nearly 3 times, and a very strong average cash on cash of nearly 12% over 5 years. Let's take a peek at the hotel overview. This property is located in Hollywood, Florida, right outside of Fort Lauderdale. It was built in 1995 and was last renovated in 2018. It features 150 keys across 6 stories. Now, the IAT franchise expires by the end of this year, making this a perfect time and perfect opportunity for strategic rebranding to a Delta by Marriott. And currently, this property is owned and managed by Prince Bush Hotels, which is, and I propose bringing in Concord Hospitality as a third-party manager. Now, before jumping to the next part, let's talk about what this hotel has to offer. As you can see, there's a restaurant, a bar, and a business center. There's also a very spacious meeting room, a large outdoor patio, and a resort-style pool, and a fitness center. Now, to better understand the opportunity, let's talk about the market overview. This location checks all the boxes. We're right off the I-95 highway with direct access to 2 airports, the Fort Lauderdale International Airport and North Perry Airport. So that is perfect for both leisure and business travelers and cruise passengers. And you can also easily access hospitals, stadiums, university, and especially the beaches and the 2 cruise ports, the Port Everglades and Port Miami, which is a huge demand for us. So with that being said, this hotel captures demand from every direction, and that kind of balance keeps occupancy high and revenue stable. Now, let's zoom out a little bit and look at the 2 powerful markets that this hotel taps into, Fort Lauderdale and Hollywood. So those are not just sunshine and palm trees. Hollywood, sitting between Miami and Fort Lauderdale, taps into more than 10,000 businesses, major hospitals, and nonstop tourism. Fort Lauderdale alone contributes $35 billion to the economy annually. So this location isn't just good. It is strategic and outstanding. Now, with the very strong market behind us, let's see where we position relative to the competition. This comp set includes hotels that are very similar in size and location to the subject hotel, which is perfect because that would help us benchmark our revenue and expense assumptions. And also, this comp set includes a mix of upscale to upper upscale hotels, which is perfect because Delta is positioned right in between. And you may notice that there's some select service in this comp set, like the Hyatt Place, Hilton Garden Inn, or AC Hotel. However, those have very strong brand loyalty and solid performance. And number 5 and 6, Marriott and Hotel Delo, will command higher ADR for us due to being newer properties and higher brand positioning. Now, what about the future competition? There are 6 hotels in the pipeline, but the good news is most of those won't open until 2026 or 2027. So that gives us a full year to stabilize after renovations and before new keys hit the market. And some are even select service, such as the Fairfield, Tao Place Suites, or Hampton Inn, number 2, 3, and 4. So they will not compete directly with us in our space because we're full service. And number 5,
even larger player like Omni Hotel, they target very different clientele. So while we're always mindful of supply risk, this new inventory will not affect our pricing assumption and ramp-up timeline. Now let's get to the most creative part of the deal, the conversion plan. So first of all, why Delta by Marriott? Delta is an upscale, full-service brand designed for efficient conversions like ours. It also offers flexible operating model with streamlined programming. And now, here's where it gets exciting. Marriott has actually looked at this hotel for a Delta conversion, and it fits perfectly because there's no existing Delta hotel in Fort Lauderdale or Hollywood, so we'll be the first one in the area. And plus, Marriott has the largest loyalty base in the world with more than 200 million members, so that's a massive demand that we can tap into from day one for sure. Here you might be wondering, why make the switch, since Holiday Inn also has a good brand loyalty as well? So here's the answer. If you stay as a Holiday Inn, the returns are still decent. But if you convert this into a Delta, you more than double the returns. And I believe that with the brand upgrade, the rate growth, and the loyalty demand make this Delta conversion a far more compelling investment. Now to ensure strong performance post-conversion, I propose bringing in Concord as a third-party manager. They are a Marriott-approved, award-winning hotel operator with more than 35 years in the industry and a very strong Florida presence, with 13 property actives in the portfolio. And most importantly, they excel at cost control, which is a key for maximizing margins, especially after a high-expense previous operator. Now imagine that you're Alex, a frequent business traveler. You just landed at the Fort Lauderdale airport and arrive at what used to be a Holiday Inn, now a Delta by Marriott. The look, the feel, everything has been fully renovated. The building welcomes you with a polished, modern, blue-themed look, and as you walk into the lobby, you realize that the old business center is gone, replaced with a more spacious and elevated design lobby. Now you feel a little hungry, especially after a long flight. So then you head to the newly added Grab and Go for a fresh salad and sparkling water, then swing by the newly added Delta Pantry for a quick snack. Then later that night, you feel like you want to chill out and relax a little bit. So you head to the newly renovated Delta Bar upstairs to enjoy the live jazz music with the perfect espresso martini. So the lighting is soft and the atmosphere is very classy and very calm. It's very demure and very mindful. So the next morning, Alex works out in the newly upgraded fitness center and then heads to the conference in the tech-ready, newly renovated conference room. From start to finish, from arrival to departure, everything feels so fresh, intentional, and premium, which is exactly what today's travelers demand, and exactly what would drive rate, growth, and long-term value for us. Now that we have a great story of Alex being a customer at the amazing Imagine Delta, let's talk about how we can execute the plan, how we can bring imagination into reality. Renovation planning kicked off in the middle of this year with heavy construction scheduled for July to September to avoid the peak season. The goal is to complete renovations and rebrand to Delta by the middle of next year. And I have talked to IAG, and we will be able to secure the 6-month extension after the IAG franchise expires to keep operations smooth. And we will expect stabilization by 2027 with an exit targeted for 2030. So that's 5 years from now. With the vision and timeline in place, let's dive into the most exciting part of the deal, the numbers and returns. Looking at the historicals, there are 3 things to consider: occupancy, ADR, and RevPAR. Compared to the old Holiday Inn comp set, this hotel outperforms. But compared to the newly proposed Delta comp set, this hotel underperforms on ADR and RevPAR. However, but that is because this is still a Holiday Inn, while the new Delta comp set includes more premium and upscale hotels. However, if you look at the occupancy chart on the left, you would notice that the occupancy is already in line with the new Delta comp set, and that's the opportunity. By converting this into a Delta, you will be able to increase ADR and RevPAR while maintaining strong occupancy that this hotel already captures. And this slide captures the conversion opportunity in one clear snapshot. Today, this Holiday Inn sits at 117 RevPAR, but when we benchmark it against the proposed Delta comp set, you would see a clear $20 gap, and that's a conversion opportunity that we can capture for sure. Now imagine the hotel 5 years from now, beautifully renovated, operating as a Delta by Marriott, and outperforms the comps. At year 5, I have projected the occupancy to be more than 80%, 200 ADR, and 170 RevPAR. And based on the hotel's strong historical performance and great demand drivers out there, I'm very confident that these projections are achievable. With that being said, revenue ramps up quickly to nearly $11 million at year 5. I have also added $22 per night in parking fee, which is an easy win for us given the hotel's great airport location. And also, because this hotel already owns a parking lot, there's no additional expense. And at the same time, NOI triples from 1.1 as of last year to more than 3 million at year 5, and EBITDA margins grow to 35% as well, thanks to the efficiencies of Delta operating model and Concorde's management. Let's talk capital and asset. We're funding this project through 40% equity and 60% leverage. Equity comes from $750,000 in Marriott key money, nearly $11 million from the equity partners, and $50,000 from the sponsor. And on the debt side, I've secured $17.5 million senior loan from Huntington Bank with a fixed rate of 7%, 25 years in amortization, and 2 years of interest only. And on the asset side, the sale is expected to be $44 million at year 5 with an asset cap rate of 7.25% based on the CoStar reports for similar submarket and sales comparables. And of course, no deal is without risk, so let's pressure test it. As you can see on this sensitivity analysis chart, the three biggest drivers are the senior debt loan-to-value ratio, renovation costs, and acquisition price. But because of those, I've locked in a fixed rate debt, a detailed renovation budget for Marriott, and a fixed purchase price. And the best part is, in the low cases, the IR is still very strong and attractive, and in the best case, in the high case, this deal absolutely crushes it. So now if you know the game, let's take a step back and look at the bigger picture, the investment strategy and how we could manage the key risk in this deal. The three biggest advantages that we have are the prime location, Marriott as a global brand, and Concorde's proven expertise. One thing to consider is a high renovation cost upfront, but that is also our opportunity because post-renovation, we would have a newly renovated product that's ready to outperform the comps. And of course, economic volatility exists given today's market conditions. However, because of that, I've locked in a fixed rate debt, fixed purchase contracts, and with contingencies built in across the board, and we will source the materials from Vietnam to hedge against the tariffs. So in summary, this is a highly compelling value add opportunity. And especially, we're going to be the first Delta in Fort Lauderdale and Hollywood, which is a phenomenal chance for you to lead the market with a clear differentiation. And for you as an investor, if you put in $1 million today, you'll get $3 million in your bank account after 5 years. And I believe that with the strong fundamentals and risk controls in place, this deal is a well-calculated and phenomenal investment. Thank you all so much for your time and attention today. And special thank you to SHaD team, Tracy, my mentor, the sponsors, and my professors. I'm so grateful for this opportunity and so excited for what's ahead and happy to answer any of your questions.
Great job, Veronica. All right, how do you feel? Feel
Excited.
good? You feel
Yeah,
good?
I'm
All
so
right.
excited.
You're so excited. Awesome. All right, judges, what do we got? Go ahead.
I'll start. Phenomenal job.
Thank you.
Alex with IHG.
Great recruiting.
And I love Holiday Inn.
Hi, Alex.
Very, very well done, truth be told. So congratulations on having the courage to get up here and do such a thorough analysis. When you look at conversions and when you look at the overall market, you had demonstrated, obviously, there's kind of a clear saturation of both Hilton and Marriott now, existing supply, and then roughly 75% supply of Marriott coming in. Converting an asset now that's outperforming or performing at par with its comp set, recognizing those other risk-adjusted factors, how would you describe that to investors, especially when you look at full service nature in airport markets, expense load, lower rated business from a crew perspective, et cetera?
I understand that there's a brand saturation in the market, especially in Florida and Hollywood and Fort Lauderdale, because that's such a a big market with a lot of brands in there. But the reason why I picked Delta and Marriott is because Delta has the largest loyalty base in the world. And also Delta, there's no Delta hotel in Fort Lauderdale or Hollywood. So we'll be the first one. And we would enter the market with a Delta flag with a clear differentiation because we're the first one and we're the only one, the unique one in the market. So I believe that is the biggest advantage that we have for this deal. And I'm excited for this to become reality. With Alex become the customer.
Yeah. There you go. Way to do it. There you go. I love it. Jenna.
First, yeah, great job, great analysis. Thank you so much for all your work
Thank
on
you.
this. So I would love to understand the thought process to going to a full service hotel and how the operating expenses compare and if you're seeing enough lift on the ADR side to justify it.
Definitely. Thank you for your question. So I think that this hotel is already a full service. So I think that going from to upscale and full service brand would be a great lift in ADR and RevPAR for us. And also this hotel is already very strong in occupancy. And I believe that that's the opportunity with, by the conversion, we'll be able to uplift ADR and RevPAR while maintaining a strong occupancy that this hotel already captures. And then so in terms of operating expenses, we have Concord, the great management company, the great hotel operator with more than 35 years in the industry. And I believe that with Concord's management, Concord's guidance, and Marriott's brand loyalty, managing the costs and managing the operating expenses is not really a problem to us, and we're able to achieve the great IR.
Great. Michael.
Within your renovation budget, kind of to piggyback off of Alex's question from the previous presentation, within that renovation scope, do you have contemplated mechanical, electrical, and plumbing, given it's a 30-year-old asset? Have you thought about like the mechanicals, the stuff on top of the cosmetic renovation?
Definitely. Thank you for your question. To be honest, I did think about it a little bit, but not so much. But I believe that I have the contingencies built in with $55,000 per key. That sounds a little high, but because I have contingencies already built in. And also that is already provided by Marriott because I reached out to Marriott and they did a high-level PIP scope for me. And I believe that $55,000 per key is solid, and with the contingencies built in and with the sensitivity analysis, as you can see, there's a variety of factors, and with different renovation costs and acquisition prices, still have a very strong returns and very strong IRs. So I think this is a great deal.
Awesome. Brian, Taylor.
Well, I'd say like this, a great job anticipating questions because you addressed literally the two questions that I had. You addressed in your presentation, and one of them was that gap between when that IHD flag comes off and aligning with when you expect the Delta flag to come online. So the fact that you kind of pre-negotiated a 6-month extension, kudos to you on that, because a lot of newbies coming into business make mistakes when it becomes to timelines and end up going dark, which then creates a whole set of other problems. So congratulations on that. Again, you keep harping on Deltas. It's going to be the only Delta in the market. It's going to be the first. Like, there are challenges that come with that. So I think kind of harping on that same point around market penetration and representation of the Marriott. There's going to be 7 or 8 Marriott products in that market. I'm not sure what the mileage is. So what is your plan to differentiate yourself from the other 7 or 8 Marriott products that may be within a 2 or 3 mile radius of where your property is going to be after such a significant investment, because that's going to be key to make sure that you get your fair share?
Definitely. Thank you for the question. So I think that, as I mentioned, Delta we're going to be the first one in Hollywood and Fort Lauderdale, and then the closest Delta is in West Palm Beach, which is 50 miles away. And they're also a conversion from Holiday Inn to Delta by Marriott as well. So that would be a great example for us in terms of conversion. And, based on that, the Delta in West Palm Beach sets a great example for us because they are also performing really well in terms of, revenues, occupancy, and returns. So that would be an example for us. And then also, as I've mentioned, with Merit Loyalty and Concord as the management company, and we being the first one in Hollywood and Fort Lauderdale, that's the biggest competitive advantages for us.
Great. Taylor?
Yeah, my question relates more to kind of your exit assumptions and how you settled on the 7.25% cap rate. From my vantage and what I've seen, that's more of a beachfront, maybe full service property in this market versus suburban closer to the airport. So what comps did you use to settle at that cap rate? And especially with the new supply coming in, how do you plan on achieving that?
Thank you for the question. Absolutely. So I've looked at different CoStar reports for Hollywood airport hospitality submarket, and I also looked at different CoStar reports for Hollywood, for different type of asset classes in Hollywood, like industrial, multifamily, or retail, to see what the variety of cap rates are. And then I've done the research on the sales comparables. On the screen, you can see that they're the two best sales comparables that I could find so far. The Courtyard West Palm Beach report and Airport and Staybridge Suites Orlando Airport South. And then those two hotels are very upscale, both upscale, very similar in size. One has 103 keys and the other one has 135 keys, while we have 150 keys. So those two hotels are very similar in size to the subject hotel. And those are in the Florida airport submarkets. And sale price is also similar to ours. We are 19 million and those two are, one is 20.5 million and the other one is 22 million. So those are very similar. And so one cap rate is 7.10%, the other cap rate is 7.38%. So based on those factors, the CoStar reports and the sales comparables, I calculated a blended cap rate that reflects both the current market benchmarks and the value increase from delta conversion. And then also to answer your question, the second part of the question in terms of supply. So looking at this list, most of those are select service, and Omni is a very large player. They have 101 rooms, so they target very different clientele. The one thing that we should think about is the Courtyard, but the thing is, there's already another Courtyard in the area. I believe that's a Courtyard Fort Lauderdale Airport and Cruise Port, which has 174 rooms. So there's already a dilution in the market for this new coming Courtyard, and why we are going to be the first Delta in the area. So that's a clear differentiation for us.
Thanks for having the data.
Yeah.
Thank you.
Awesome. All right, now to our audience. I'm going to scan the audience. Any questions from our audience? Hearing none, seeing none, I'm going to go to you, Tracy, in the Shad Talk table.
Hello. Thanks for having me, and great job, Vu. You clearly did your homework and went above and beyond.
Thank you.
Also, go green. Supposed to say go white?
Go white.
Michigan State grad.
Yes.
I'm sorry, I'm a little bit nervous in here.
Yeah, Michigan State alum. I competed in She Has a Deal back in 2022, and happy to be back.
Yes. I don't know, is this time for a question? Okay,
Yeah.
Question. I do have a question, actually. I have one question. One of my questions, the acquisition cost of 19 million seemed a little bit low, especially with the sales comps you had, given that those were select service. This is a full service asset and arguably an even stronger market. But I know that was part of your sensitivity analysis. So what was the acquisition price for that worst case for the sensitivity analysis?
Thank you for the question. So I've run a sensitivity analysis of the variety in terms of acquisition price. At the the worst case scenario is 23 million, and the high case scenario is 15 million. And on the sensitivity, I don't have the sensitivity analysis chart here, but in the, there we go. So as you can see, in the worst case scenario with the 23 million of acquisition price, the IR is still very strong at about 19%. And in the high case, it's 34%. So in terms of I have fully incorporated the risk of having, variety of acquisition price into the model, so that's why I run a sensitivity analysis chart. And then also, this hotel currently has about 1 million of NOI annually, and based on the going-in cap rate is about 9 to 10%. So based on the NOI of 1 million annually and the going cap rate of 9 to 10%, I believe that 15 to 17 million reflects a better, market price for this hotel. So that's why I think that 19 million is a solid price for this hotel asset.
Awesome. Great question. Thank you, Veronica. One more big round of applause. Congratulations. You're going to head backstage. All righty. So now you all know what to do. You're going to scan that QR code. You're going to rate the pitch. As a reminder, this is 5% of the overall score to vote on Veronica and Evergreen Capital. And now we're going to head back to Thajal backstage. Thajal, take it away.
Hi, thank you so much. And I have Veronica here. Good job.
Thank you.
Earlier, you were kind of like, how many people are out there? And we were like, not that many, like 5. But you killed it, so good job.
Thank you.
So question, you're a finance and econ major, correct?
Correct.
So where did you think that hotel ownership was a pathway for you?
So I'm also minoring in real estate as well, and my parents both are in real estate. So really, real estate has been a dream for me to work into. I've always wanted to work into real estate, and I'm, ever since I joined Michigan State University, joining the real estate investment club and knowing about different types of asset class, hospitality and hotels just stand out to me as something very similar. Something very special and something very unique. So I love real estate, I love hospitality, and that's why I participate in SHaD.
I love that. And with the entire process, what is one key takeaway that you have? You've made it here. This was the final stage. What's something that you think that you're going to take away from here and remember it forever?
Definitely the confidence and the ability to overcome my fears when speaking in front of a big crowd with a lot of questions coming in. But the audience today was fantastic, and I really appreciate this opportunity. This is going to be a great journey, a great memory of me, and I have no regrets. I've did my best, and I'm so proud of myself, and thank you everyone for everyone who've been supporting me.
Well, trust me, the journey is only going to continue from here, because once you finish off on that stage, you officially become a part of the SHaD Alumni Sisterhood. So congratulations, good luck, and welcome to the sisterhood.
Thank you so much.
And now I'm going to announce our first raffle winner. So what you see behind me is a very lovely SHaD bag. And so can I get a drum roll, please, out there? All right, so our winner is Helen Okabe. So if you're here in the room today, reminder, please head to the registration desk after the end of the event. And if you're tuning in live, then we will reach out to you personally. Our next sponsor video is pt2, so please stay tuned for a few words.
This is your last chance to invest in the pt2 Hotel before the investment doors close. We're converting a classic senior living facility into a modern Georgian estate, blending Southern hospitality with crafted indulgence. Next to the prestigious Eagles Landing Country Club and Golf Course, where guests may enjoy resort-style amenities. Projected cash-on-cash returns you don't want to miss. 18% IRR and 2.5 times your investment. Investment minimums starting at $2,500. No available cash to invest right now? No problem. Invest with your retirement or trust accounts. It's an easy rollover process with no penalties. Investment doors are closing. Don't miss out. Secure your stake in the pt2 Hotel today.
We're back for a SHaD Talk, a special one. Michigan State. Michigan State has been competing in SHaDPitch for 6 seasons. 6 seasons, and always had an impressive team. I don't know where to start. There was so much content. I'm so proud of Fung Vu. I mean, so much content. So I'm sitting here with some SHAD alums, so they know how it feels. They know what's in the analysis. And I don't know, who wants to go first? I mean, Lily Payne, she's a Michigan State grad. You have a lot of content here. You've been looking at spreadsheets since we started. What's up? What's going on? What do you think?
Just pivoting off of what Tracy said, again, great job. I think what she really did a good job at is kind of having her thought process as an answer for all of the questions. No one has a crystal ball. We don't know what's going to happen, especially in today's environment, but kind of just being able to defend your thought process, I think, is the most important thing. But my questions would be, I don't know if anything was asked regarding insurance expenses and kind of projecting that in today's environment, especially in Florida. I think that would be kind of my question for Vu.
And she would have an answer, because I asked her the same one. How about Emma Claire Spring, who also pitched a conversion to a Delta and also lost her pitch partner at the very last moment, but won. I don't know. What's what I mean?
I don't know. Yeah, I was going to say, this one hits close to home. Holiday into Delta conversion. Yeah, I think she did an excellent job. She really thought through absolutely everything. Yeah, I think she did an incredible job. I really appreciated her sensitivity analysis, really looking into all of the factors that could have gone wrong or maybe even better than expected, and she had an answer for everything. I think my one recommendation would be just when it comes to the sales comp, seeing if maybe there are other full service assets that she could look at, because the others were select service, so I think that could impact, what the acquisition cost could be. And then, yeah, I also love how she really looked at what the returns would be if she kept it as a Holiday Inn. The PIP cost in that case was about half of what it was for the Delta, but even with a PIP cost of almost double, the projected lift in ADR and occupancy made it a better choice. So great analysis there.
Yeah, when she did her practice pitch for me, I thought I was going to throw her with that question, like, why convert it? If it's not broke, don't fix it. I actually know the market. I have a couple of properties in that market, and it's a great market. I look at that hotel all the time, driving from the airport. It's like, if it's not broke, don't fix it. I mean, Jessie, what did you think about her response?
Yeah, I mean, she put in a ton of work, clearly, to anticipate questions and make sure that the decisions that she was making were made with sound data. And it's clear that she did a lot of work, but one of the things that she really leveraged through the SHaD network was this connection to many different data providers. So she worked with Star, Hotstats, CBRE, and Calibri to make sure that every number that she put into her deck was sound. So I just want to give a shout out to the SHaD community and being able to make sure that all of her decisions were based on data.
Yeah, and thank you to our data sponsors, because it is so important that the women have real data and it's complementary so that they can complete. So I really appreciate CBRE, Hotstats, Calibri, and STR, because they have been here at the table since the first year.
Yeah, it's really amazing.
Yeah, so thank him for that. I also, since we have a couple more seconds, I just want to give a shout out to Jim Anhut from Michigan State. I remember talking to him when I had this vision and I was trying to get, teams to sign up, and he kept saying, well, I don't know, and da-da-da. I think he would be very proud to see the analytical power that Fung Vu demonstrated there. And I mean, the rest of the Michigan State teams year over year over year. So thank you to Michigan State for always being a part of She Has a Deal, and you're producing some very strong women owners. Oh.
Awesome. Great. Thank you, Tracy. I will tell you, as an Ohio State grad, I'm glad it's Michigan State and not the University of Michigan, but we'll still cheer them on. All right. So our next presentation comes from a rising hospitality and real estate leader studying at Virginia Tech and the founder of Court Capital.
Hi, my name is Courtney Begoon with Court Capital, and I'm a student at Virginia Tech. I came into Virginia Tech as a commercial real estate major. I then took a hospitality class and fell in love with it. I then realized that, hospitality and real estate go very well together, and I could focus that on hotels. I wanted to be in an area where I could have a network laid out for me, and I could have an education roadmap and different modules to learn about hotel investing and everything in the commercial real estate world. She has a deal, has kind of laid out, Tracy's laid out all for connections, all for network. Everybody that has came and spoke to us in the master classes, everybody that we've met through networking events with She Has a Deal, I think they all will be, valuable resources after, I leave college. But I think probably the most valuable lesson that I've learned is just that there is people out there that want to help young adults that are going to enter, this industry. And to not be afraid to ask for advice or to ask for knowledge. I would love to start off kind of as an analyst and maybe work for a broker, but I think my end goal is to be a hotel owner of some sort.
Bringing an innovative hotel conversion concept set in vibrant, please welcome the founder of Court Capital, Courtney Bengu.
Hello, everyone. My name is Courtney Bagoon, and I'm the founder and CEO of Court Capital. I'm a student at Virginia Tech studying commercial real estate and hospitality and tourism management. Today, I will be presenting the opportunity for you to invest with me in a Homewood Suites by Hilton in Boulder, Colorado. I plan to acquire, renovate, and restabilize this asset. Here is our agenda for today. I plan to give an overview of the deal, highlight some demand generators, and go over the financials. I will then answer any questions you may have. Before getting started, I want to mention the return analysis highlights. Based on my 7-year hold, I'm projecting a 22.27% IRR, an 18.16% average cash-on-cash return, and a 2.98 multiple on invested capital. Starting with the executive summary. This deal is a 112-key Homewood Suites by Hilton in Boulder, Colorado. It is fee simple interest, is non-unionized, and the cost per key is $159,000. Homewood Suites is a leading upscale extended stay brand. This property features 400 square feet of meeting space, ideal for small events or business gatherings. This hotel originally opened its doors in 1990 and was last renovated in 2019. Diving into more of the property details, this all-suite product has home and lifestyle-centric amenities that contribute to the overall guest experience of an extended stay traveler. The PIP for the Homewood Suites has a mix of soft goods as well as case goods. Additional upgrades include parking lot repairs, patio improvements, and exterior repainting. Technology improvements include enhanced guest Wi-Fi and Hilton-approved streaming services. This comprehensive renovation ensures that this property meets Hilton standards for relicensing under the Homewood Suites flag. Why Hilton, you may ask? Hilton has an unmatched global presence with over 6,000 properties in the United States and over 210 million Hilton Honors members. Homewood Suites is a leading upscale extended stay brand that has 544 hotels that has a reputation for targeting business travelers and family travelers who appreciate all of the extra space when away from home. After speaking with the Homewood Suites representative, they have extended the flag until 2040. As part of my business plan, I plan to bring a new management company to increase the length of stay and add additional revenue. My management company choice is Concord Hospitality. Concord currently has 8 Homewood Suites in their portfolio and operates 3 properties in Colorado. With knowledge and resources in the area, I feel like they would be a great choice. I will now transition into my market analysis and demand generators. We are going to start off with Denver MSA. The Denver MSA continues to experience rapid growth in 2025 and beyond, driven by a strong economy, diverse job opportunities, and a desirable quality of life. The Denver International Airport welcomed a record-breaking 82.4 million passengers, which was a 5.8% increase over the previous year. It is currently the 3rd busiest airport in the United States and the 6th busiest airport in the world. This is relevant because the airport is only 35 minutes from our hotel. The Colorado Convention Center just completed a $233 million expansion, bringing more meetings and events to the area. In 2023, Denver had 20.5 million overnight tourists spending $8.8 billion. Overnight visitors averaged $427 per person per trip. Lodging spending hit $2.5 billion, up 9.1%. 83% of overnight travelers to Denver were repeat visitors, and 57% of those overnight travelers to Denver had visited before in the past 12 months. People are coming to Denver and wanting to come back. Denver is home to 4 professional sports teams. Coors Field, Empire Field at Mile High, and Ball Arena all have professional stadiums that are bringing in different events and different guests all year around. Red Rock Amphitheater is just 22 minutes from downtown Denver and is known as one of the greatest concert venues in the world. Overall, Denver MSA is an anchor to Boulder and a gateway into the market. Denver MSA is compressing and is high growth that radiates to Boulder. Moving up the road 40 miles is to Boulder. Boulder has seen growth in the past few years due to an increase of health and wellness among travelers. According to Visit Boulder, they estimate that 3.3 million tourists visit annually. Boulder was named the happiest city in the United States in 2017, and talking to different Boulder residents, they still feel the same way. Cultural events play a huge role in the community. The Colorado Music Festival is a multi-week event that brings in visitors from across the region, adding to the hotel's travel leisure clientele. The Sundance Film Festival is moving to Boulder in 2027. In 2024, out-of-state visitors spent $106 million in Utah during the festival. Boulder and Colorado should be excited for this transition. Google currently employs 1,500 workers in Boulder, and Ball Corporation also has a presence in Boulder with 386,000 square feet of meeting space. Visit Boulder is a great resource to see all that there is to do in Boulder. A specific demand generator is the University of Colorado. The university serves over 40,000 students, and it's continuing to grow, which saw a 3.4% increase in admissions for last fall. This steady influx of students, staff, visiting families, and prospective students creates a significant demand for nearby accommodations like our Homewood Suites. This school is a top public recipient of NASA research funds, and more than 650 faculty and students participate in research. These factors drive a steady flow of visiting scholars, researchers, and industry professionals who contribute to the hotel demand. Now, cue a Deion Sanders joke. The University of Colorado rejoined the Big 12 last August. Folsom Field, which is the football field, holds 50,000 people. In the past 2 years, each home game has been sold out. They are calling this the prime effect. Listed here are some additional demand generators. Boulder has over 150 miles of trails and 60 parks that support hiking, running, climbing, and all things outdoors. Continuing the story of this hotel, we will move into the comp set and look at new supply in the market. I have selected these hotels to be in my comp set. They offer similar amenities and are located in Boulder. Now, here is a map of our Homewood Suites located in green with our competitors located in red. You can see we are on the outskirts. However, this can be a prime opportunity for us to pick up corporate travel. Here, we are comparing the 2024 performance of our Homewood Suites to the comp set. This potential investment is ranked number 2 of 7 for the year to date in ADR and occupancy. And I had this data from the STAR report. Now, transitioning into new supply in the market. We have a Moxie Hotel and an independent hotel called Limelight Hotel. The Moxie opened last May and brought 189 keys to Boulder, and the Limelight Hotel will open this fall, bringing 252 keys in a convention space. There's currently 5 Limelight hotels already in Colorado. Now for the fun stuff. We will begin the financials for this potential investment. The total capital investment for this potential property is $17.8 million, including a purchase price of $12.5 million, a property improvement plan of $3.6, and closing cost and working capital for $1.7. Breaking that down, that is $159,000 per key. After having conversations with different lenders, I chose the Peachtree Group credit. They offered a 65% LTV on a 7% interest rate on a 25-year amortization. I do have the 2 years interest only from year 1 and year 2 for our renovation. Again, throwing up my return analysis highlights, based on my 7-year hold, I'm projecting a 22.27% IRR, an 18.16% average cash on cash return, and a 2.98 multiple on invested capital. Let's take a look at our historical performance for 2024. Here, we are comparing our subject property for the Homewood Suites in Boulder to all Homewood Suites properties. This Homewood Suites has demonstrated strong performance in RevPAR and ADR. We are lacking in occupancy because we are currently an unrenovated product. This data is sourced from Hilton and the Homewood Suites representatives. Seeing where we are in comparison to other Homewood Suites, let's see some strategic growth opportunities for this potential investment. My first have is promoting the Suite Shop. By promoting the Suite Shop, which is like a grab-and-go market, we can cater to guests who may not have time for a sit-down meal or want a quick snack option while on the move. This push can also help create a new revenue stream by selling prepackaged meals, beverages, and snacks, which will both attract business travelers as well as families. Next is increasing the length of stay. One of the most impactful ways to boost revenue is by increasing the length of stay. To encourage longer stays, we can offer targeted promotions for extended visits or provide incentives for corporate clients and receive more corporate client contracts. We can send out mass emails to our past guests to see how we can improve before their next stay and invite them back. With the average length of stay being 2.47 nights, increasing the length of stay can help lower some of our variable costs. These strategies together aim to optimize the guest experience, enhance revenue opportunities, and ultimately strengthen our property's market position. Let's dive into some key drivers behind our projections. Starting with ADR. We are projecting a steady rate from $175 in year 1 to $205 by year 7. That's a 17% increase over the term. Now, occupancy rises quickly from 65% in year 1 to a stabilized 72% by year 3, where it holds firm through year 7. According to Boulder's HVS report, it indicates a gradual decline in hotel occupancy rates from 2024 through 2026. Recovery is expected to begin from 2027 through 2029. Several factors contribute to this downward trend, including an increase of new hotel supply, economic uncertainty, and the unknown impacts of tariffs. Despite some short-term challenges, the market is expected to stabilize and begin recovery by the end of the decade. The combination of increasing rates and stabilized occupancy drives the RevPAR from $114 to $147, a 29% increase over the period. I'm confident in this trajectory with a solid balance of rate strategy and occupancy optimization. Here, we're going to highlight some key factors from the pro forma. Starting with total revenue, we see a steady increase from $4.76 million in year 1 to $6.08 million in year 7. This represents a 27.7% increase over the period, averaging approximately 4% year-over-year growth. Moving to GOP, we begin at $2.55 million in year 1 and grow to $3.48 million by year 7. This reflects an overall 36.6% growth, showing not that we're just increasing top-line revenue, but also maintaining efficient operations. When we examine NOI, the numbers continue to rise from $1.59 million to $2.15 million over the 7 years. That's a 35% increase, again, highlighting operational consistency and strength in our margins. And finally, cash flow follows a similar trajectory, starting at $789,000 in year 1 and growing to $1.17 million by year 7, a strong 48% total growth, indicating improved financial health and a healthy potential return. Here is my projected exit, and again, I want to reiterate the $17.8 million total capital invested with a purchase price of $12.5 million, a $3.6 million PIP, and a $1.7 million closing cost and working capital. I plan to have a 7-year hold, and we are projecting a leveraged IRR of 22.27%, a cash-on-cash return of 18.16%, and a 2.98 multiple on invested capital. Thank you. I would also like to thank all of the sponsors for She Is a Deal, my She Is a Deal coach, all of the mentors, and everybody who has helped me get to where I am today. Thank you.
Awesome. Great pitch, Courtney. All right, judges, time for your feedback and questions. Who will start? Ryan?
Yeah, I can start. From a supply standpoint, I was kind of surprised to see that from a comp set perspective, there was only one other extended stay hotel in your comp set, which was a Residence Inn. Mm-hmm. And then for the new supply coming in, those were transient hotels as well. Yes. So kind of connecting the dots, looking at what your average length of stay is, only 2.4 nights, and that's one of your goals is to drive that average length of stay. Is there any concern that there's not true extended stay demand in that market, and what are you trying to move that needle to from an ESOC perspective, right? So
definitely the Moxie and the Limelight Hotel are not extended stay products, so they will not directly impact this Homewood Suites. However, I am trying to get the extended stay from 4 to 6 nights and having conversations with our management company, Concord, of how we can do that. Has been a goal of mine. But just knowing that we are in a college town, but there is some corporate travel, and trying to target that corporate travel and increasing in my pro forma, I have added more money to my marketing and sales team for them to have that job of reaching out more, spending more time dedicating to increasing our length of stay.
Alex?
Courtney, that was a really great presentation. You were poised, calm, cool, and collected, so very well done. Very well done. Question, have you spoken to Hilton as it relates to how much term is remaining on the franchise agreement, and then subsequently how much term they would be providing for a, we'll call it a relicense?
Yeah, they have extended the flag until 2040, so that is the plan. I would exit before then.
And is that I guess when you look at that, and then from an acquisition and a purchase price perspective, it'd be helpful to kind of understand where those numbers came from, because I think it was about 110 a key in terms of basis of acquisition, which is well below replacement cost, phenomenal basis. What is the dynamic there where you actually think that you could get that done and a seller would agree?
I had multiple conversations with Peachtree Group to get an interest rate, and we talked about my LTV and my amortization, and then talking with the Homewood Suites representatives of what they still have left on this asset since it was built in 1990 and is an older building, but seeing that they do think that we can have, it will last until 2040, and then after that. Thank you.
Great job. Really enjoyed your presentation and very clear. So thank you so much. My question is about the location. And so you mentioned that this property, as compared to the comp set, is a little bit more on the outskirts of town. Can you talk to us about how you think it will be able to then compete with the properties that are closer in, and what sort of advantages and disadvantages it has in this location?
No, definitely. It is in a college town with the University of Colorado, so major events like football games, graduation, big basketball game, all the hotels in the area are going to be sold out. So I do think we are getting that travel. However, we are not, the hotel is not taking the opportunity to target the corporate travel that is located near them, on the outskirts of Boulder, not near the university where our competitors are. So I think that is the biggest target, as well as reaching out to the University of Colorado Athletics, seeing if the groups that are coming for them, researchers, industry professionals, are speaking, are staying, going to the campus for a few days, stay at our Homewood Suites. So just seeing how we can be in the community and get more travel.
Great. Taylor, Michael.
Yeah, my question is related to pro forma. Is the RevPAR kind of increase that you're projecting mostly market based because with your strategy of involving more extended stay, sometimes that helps with occupancy, but you get a lower rated business, and you're driving RevPAR substantially throughout the hotel with doing a somewhat defensive PIP, I would say, not totally revamping the product. So how would you speak to that?
Yeah, so with my the rate increase from $175 to $205, as well as when I stabilized at year 3, my occupancy goes from 65% to 72%. I just think the combination of them together is driving my RevPAR to get it to where it needs to be today. And I am trying, this is a very conservative and realistic route I feel that I've felt for my rates and my occupancy. And I did kind of have HVS back me up where they do think we will kind of level out. But my rates can be more aggressive. However, just with the unknown certainties of the world right now, I feel like this was a realistic measure.
Getting great presentation. Kind of piggybacking off of the previous question, with that increase in occupancy, given sort of the garden style nature of the property, have you contemplated increased expense costs given the inefficiency of the layout?
Yes, the hotel is multiple buildings. There are 4 buildings, so it is not one. So that does make it a challenge for some guests. However, talking with employees of the Homewood Suites, there are a closet, all the supplies they have are in each building. So making it less need to go outside to bring the housekeeping carts. And I think the biggest concern would be communication between all 4 buildings. But other than that, yes.
Awesome. Judges. Oh, one more, Brian.
On the RevPAR in 2024, the property had a RevPAR of 139. And I don't think your projections, you don't get to that RevPAR until like year 4 or 5, if I'm not mistaken. So how are you going to get investors comfortable with, hey, here's what the RevPAR was last year, but we're not going to get to that number for 5 years. How are you going to articulate that?
Yes, of course.
And Courtney, real quickly, just so the people online can hear, Brian's question was about getting the RevPAR back up to that number that you shared.
Thank you. We are an unrenovated product in 2024. So in year 1 and year 2, I plan to do a renovation in phases, knowing that we are a hotel under renovation. We cannot charge the rates that we normally would. And then I also think just the growth of letting the market absorb the Moxie and the Limelight. And those are the 2 hotels we know that are entering the market right now if something else does come about.
Awesome. Great. Thank you, judges, for the questions. Scanning the audience for any questions from our audience. Oh, yes, right over here. We get a mic right here. Oh. Taylor, we're going to steal that mic from you real quickly. Right here in the green.
Courtney, you did a great job.
Thank you.
Congratulations. Can I ask what informed your PIP pricing? I saw you mentioned there were some case goods and then soft good renovation in the PIP, as well as some infrastructure, RFID locks, Wi-Fi upgrades. And it's a suites product with bigger rooms. So could you give us a little insight on that?
Yes, of course. So talking with Homewood Suites of what they're normally running for a PIP with what needs to be done for the product in Boulder. And that was kind of the price range they did lay out. I did get this number before tariffs became a huge deal so that we can be flexible on that. But talking with the Homewood Suites representatives and giving me a ballpark range of what needed to be done in the price breakdown, we came to about $3.6 million. Thank you.
Awesome. Great. Thank you very much. Courtney, congratulations. Good job. High five. All right, you're going to head backstage. Awesome. All right, audience, you know the drill. The QR code is up there. You're going to scan it. You're going to vote towards that 5% of the overall scoring for Courtney and her pitch. I'm going to give you a chance to take that photo, get your thoughts in order. Give yourself a chance to do that. And now we're going to head backstage to Thadral as she talks with Courtney. Thadral, the stage is all yours.
Awesome. Thanks again. All right. Earlier we had Brooklyn do some push-ups. I need you to do a plank.
Not today. Not today.
Congratulations. Great job. One of the most wonderful things about She Has a Deal is, and especially for the early careers path, is you have the option to pitch with a team or by yourself. But Courtney, why did you do that to yourself?
This is the first year Virginia Tech has done She Has a Deal. So I kind of was the only one interested in it at the moment. I think we're getting some more girls into it. But I did it by myself. I enjoyed every bit of it. I took advantage of the opportunities. I kind of had a crazy schedule, so it might have worked out if it was just me on the team. We were doing this at some crazy times of the day, but I've enjoyed it and it's doable.
I love that. And so, what is the best piece of advice you got to prepare for today?
Just to take advantage of all of the connections, everybody you're going to meet here at the SHaDPitches, but also through the whole process of anybody that is coming to speak. Connect with them on LinkedIn, send a follow-up email, try to have a Zoom call to discuss, your property, but just get to know each other and make some more connections.
Yeah, for sure. I mean, making connections here is I believe, one of the core pillars of She Has a Deal. So you're on the right track. One final question before I let you go. So you all have heard about the 9-step masterclass program that we all go through. What was your favorite stage?
My favorite stage was step 1, identify opportunity. I feel like every night my roommates and I were sitting on our couch looking for hotels for sale that we were going to buy out of college, because that's what college students would do. Yeah. So step 1, identify opportunity.
I love that. Well, congrats. Can't wait to celebrate with you at the reception. So next, we are going to head to our next raffle. It is for a $100 gift card, courtesy of Hilton. And our winner is Andrea McCahill. So I'm not sure if you are here in the room, but of course, please head to the registration desk after the event is done. And if you're tuning in live, we will send you your items to you. This was, of course, courtesy of Hilton, who is actually a founding sponsor of SHaD. So Hilton, as always, thank you so much for your generous support and for your unwavering partnership for SHaD. Next, here are a few words from Hilton.
Hilton is bringing you more new ways to stay than ever before. With all new places, there's all new experiences to enjoy. Hilton, for the stay.
Hey. I love that slogan. They say it matters where you stay. You guys know I'm a hotel snob, right? You know that already. Okay. All right. So that was the third pitch. 2 more to go. I'm glad I'm not a judge because I think those have been 3 fantastic pitches that I've seen. And I'm so proud of Courtney because she showed up at our masterclass last year. Remember, I did a masterclass before SHaDPitch, and she was green. She was pitching up there like she was a professional. I mean, I was very impressed. I'm really happy for her. And I also have to say thank you to our sponsorship partner, Peachtree. The Peachtree Group, she was going to get her loan from Peachtree. And a little known fact, or a big known fact, my first hotel loan was with Peachtree. I appreciate Peachtree. Shout out to Matt Cross-Y and Michael Harper, who helped me get my first hotel deal done. 2016. Isn't that amazing? Anyway, so let's get to the deal. Bread and butter type of Homewood Suites, Hilton Strong brand. How did Courtney, how did she break it down? Does it work, Lily?
I think she did a phenomenal job, and a few things that I really liked was her dive into the market. I think she covered very specific statistics on the airport demand, city travelers, convention center statistics, education, sporting events, like all things I would look specifically for in an OM or in a feasibility study. So that was really impressive to me. I also thought her return metrics were pretty achievable and reasonable. Sub 20 IRR, I think she had an exit cap of 10%. So I just think in today's environment, it was reasonable and achievable.
Yeah, I think it's something I really liked about this deal too is, I know a lot of us are creative, again, having participated in the past. I still have my big dreams. But a Homewood Suites is a great product, right? And I think, she kind of highlighted that here. And one of the things I think I heard was that there's really only this and the Residence Inn in terms of extended stay in this market, which is going to make this a really strong property. So for me, I really liked, she had some of the basics down. Like I said, I don't think she was too aggressive with her numbers, made it really achievable and attractive.
Yeah, she was speaking my language with very conservative numbers because I'd rather underpromise and overachieve. So I liked her numbers. I thought they were very reasonable, and given the climate, I know she did a lot of work before we knew about all the tariffs. I was very pleased with that, and I was happy to really dig into this market because I've seen a lot of things come up in the Denver, Colorado market and adjacent cities, so I learned a lot.
I don't know if you guys are football fans, but the primetime factor.
You can't underestimate prime.
I mean, is he going to leave? Will he leave? And then does he have a RevPAR impact?
I don't know. We'll see.
I mean,
I think he's made some
Shador's
commitments,
leaving.
even though I don't keep up with that as much as.
Okay,
my
you know,
husband,
all right,
but-
well, you know.
Yeah.
I just always think about that.
And I
Because she
think
mentioned
was-
as a strong demand driver. And so do they sell out every game if primetime leaves?
Well, what I liked is that she wasn't really ultra dependent on that.
Okay, good.
That she really talked about targeting the corporate sector, which has not been targeted by this hotel property in the past.
Mm-hmm.
So I think that is a place where they can grow.
Yeah, and one of her indications was that it is, it's an extended stay property, but it's not necessarily operating fully extended stay. So needing to bring up that extended stay, lower those operating costs, drive more NOI, drive more value, get those returns that she projected.
That makes sense.
Yeah.
And, I come from an extended stay background as well. And so right now it seemed like, I think it was a 2.4, and was their kind of median length of stay, and probably should be a little longer at that. And I think, again, I didn't get to dig into what the current sales metrics mix is, if it's how much business transient and so forth, but I think kind of looking at that mix and really looking for some more core extended stay business. As much as the football is exciting, we got to stick with some of those extended stay routes there.
You gotta fill out rooms every day, not
Every
just
day,
on the
I know, not
weekend.
just in the football, not during just the football season. I understand that, but the Boulder, I don't think about Boulder so much. I do think about Denver. I used to work there, but she did do a thorough analysis, of the market, and I do believe that, she attracted me to a point where I would want to look at Boulder. And it's not too far from Denver, so fly into Denver, get there, check on the asset. Yeah. Lily, what's your favorite brand?
Ooh, that's a good question. Favorite brand? I think from an ownership perspective, I would definitely also prefer extended stay. I think Home2s operate phenomenally. From a traveler perspective, something a little bit more fun, maybe Autograph, Tapestry, love anything lifestyle and boutique.
Emily?
I was going to say, Tracy, first of all, how can we answer that question? We've got so many amazing brands in there.
I know,
How
we
can
do.
Answer that
Yeah.
question? But Tracy, I think that answer comes in two parts, because you were always the one who said, too, it's as an investor, what you're going to look to buy is very different than what I might look to stay in. So, on my leisure, maybe I'm looking at the nearest Waldorf, right, or Conrad, or Autograph, right? But, as an investor, these extended stays are they're phenomenal.
Yeah, nice margin, less operating costs.
I've been gaining some respect for economy brands.
Okay.
Over the last few months, I've been
Yes.
underwriting some economy brands and going, whoa, that return, oh my.
Well,
I'm really
keeping
my eye out.
well, maybe my economy. Your grandmama's economy is not today's economy, right?
Exactly.
So, yeah.
It's a little bit more sleek and a little more upscale, like.
I don't know about upscale, but
compared
nicer.
to what my impression is of a truck stop economy, they look a little better.
Yeah, things have changed.
Mm-hmm.
All right. Well, thank you. And I forgot to introduce your first time at the table today.
No. My name's Monica Moss-Gansberry. I'm the CEO and president of Walnut Ventures. And I was at 2021? 2022, girl, I can't remember.
So all alum here
2022
today.
Alum.
All right. Thanks, ladies.
Awesome. All right. Thank you to that Shad Talk table. We are going into pitch number 4, representing San Diego State University. Please welcome RM Investments.
And I am Chloe Rogers, and we are RM Investments.
I am majoring in hospitality and tourism management and minoring in financial services.
I'm currently studying hospitality and tourism management, but my emphasis in my major is meetings and events. For me and Martina, we both are super interested in hotels, but we have so many creative ideas. We're doing something that no one else has done before at She Has a Deal.
When I finally found the property that was going to be my property for She Has a Deal, it truly just changed everything, because I got so passionate about this one property that I was thinking to myself, wow, I see myself right there, not only owning it, but running it, managing it, being an active participant in this investment.
SHaD has helped me prepare myself for my future goals because it's taught me so many logistics that actually go into owning a property and being your own boss. In 20 years, I hope to own my own hotel and event space on Lake Minnetonka.
I'm really looking forward to taking the skills that I've learned through She Has a Deal and putting it into the future and investing in myself. It's not just some by chance you're gonna find an investment. You have to put work into it and truly find passion in what you're doing.
Watch RM Investments unveil a compelling short-term rental concept in historic New Orleans. Please welcome Martina Malolepsy and Chloe Rogers.
Hello everyone, my name is Chloe.
And I'm Martina.
And together we are RM Investments. And today we are thrilled to present to you a unique investment opportunity unlike anything ever seen in She Has a Deal history. If you're seeking a property with distinct value and a bold vision for the future of hospitality, then you're in the right place.
We believe that through a high-efficiency, low-interaction boutique vacation rental model, we will be able to maximize our revenue for Rathbone Mansions. Historically, this property has been operating well below market averages, and we believe that it could not only meet those averages, but also exceed them. By repositioning this property as a boutique vacation rental rather than a traditional hotel, we will be able to eliminate our housekeeping expenses, instead adopting an Airbnb-style approach where we place that cost on the guest. This will be transparently disclosed at booking through our management company, so not to worry. This approach optimizes our operational efficiency while also aligning with the market demand for unique, independent accommodations. Our strategy will focus on a targeted property improvement plan to enhance the hotel's aesthetic appeal and significantly elevate our digital presence to drive direct bookings.
Now a little bit about our market. New Orleans is widely recognized as a premier destination for having a lot of fun. However, in recent years, there's been a surge in corporate meetings. We see on the graph to the right here, pulled from STAR, business and group-dependent cities that are expected to grow the most. We see New Orleans coming in second to Houston at an estimated growth rate of 6%. This can be thanked to the nearby convention center just a few blocks down from Rathbone Mansions that has a renovation that's expected to be completed by 2026. Current market occupancy in the area is at 67%. This is a very steady and competitive number compared to our hotel that is currently underperforming the market at 54%. Occupancy rates and RevPAR are also exceeding pre-COVID numbers. This is notable as well as our property has the ability to do so. As a 29-room hotel, this is extremely feasible. There's also limited new supply growth in the area. That is because recently there's been a ban on short-term rentals in New Orleans. However, since we are an existing structure, this will not apply to us in the operational model that we are looking to implement.
Rathbone Mansions is a truly special investment with 29 unique keys spread across 2 buildings, which are actually right across the street from one another. Our suites range between your traditional hotel room with just a bed and your select service amenities to a full-service apartment with a full-style kitchen. The duality of our suite layouts does allow us to capitalize on both short and long-term guests. Located in the #1 best neighborhood to stay in New Orleans, Rathbone Mansions is right where the French Quarter, the Faubourg Marigny, and the Trem Historical District all intersect. And now I'm sure those last 2 sounded a little bit unfamiliar, so to refresh, the Faubourg Marigny is a historically Creole neighborhood that serves as a great alternative to the French Quarter. The Trem Historical District, on the other hand, is one of the oldest Black cities in the United States and is also the birthplace of jazz music. Currently, this hotel is owned and operated by a couple in Manhattan, and as we will discuss shortly, you see that with a change in the management style, we will be able to change the streams of Rathbone Mansions. A look at our comp set. As you can imagine, finding competition for an independent 29-room hotel is quite difficult, as most of those don't report to STAR. Looking at only STAR reporting hotels, we were able to craft this list of our competition. These 5 hotels, as you can see, are all much larger, branded, and in a completely different area of New Orleans. We're located right here, and all of those are more in the French Quarter. This is very important to realize because we are, like I said, not reporting to STAR, and neither are our competition. But this comp set is very helpful in helping us see how we can measure against the market. Now, a little bit of history. On the left-hand side here, you can see the mansion at 1244 Esplanade, which was built in 1850 as a Greek Revival-style home, which once belonged to Henry Rathbone, a very prominent banker in New Orleans. Of course, he's the namesake of our hotel and is also known as being someone who celebrated all cultures. His home was known as being a melting pot of cultures and a social hub for music. On the other side, we have 1227 Esplanade, which was built in 1846 for Miss Belle Elizabeth Aubert, who was one of the first women of color to own a home in New Orleans. It is also important to recognize that these homes have been standing for almost 200 years. And we know that New Orleans and Louisiana in general is often hit by very heavy natural disasters. So these homes have been standing with no assistance for almost 200 years.
Now that you know a little bit more about Rathbone Mansions and what makes this property truly so special to us, we're going to get into our investment summary and our debt structure, then get into the nitty-gritty of our deal, and finally end with our projections and our exit strategy. Getting into our investment summary, we plan on purchasing this property at $3.8 million, which is around $131,000 per key. Again, we're only a 29-room hotel. We have an estimated property improvement plan of $435,000. Since 2016, however, our property has already put in $675,000 into renovations. However, not all rooms and areas of the hotel were given the same love. Some of our full-service suites will need to be completely gutted, whereas other rooms will just need a simple facelift. We're really just looking to make simple improvements throughout while keeping that historic charm that Rathbone Mansions has to offer. Our closing costs then come out to be about $155,000, and when all those costs come into play, we have a total capital investment of $4.39 million.
As Chloe mentioned, that capital investment of $4.39 million is shown here with a $1.9 million existing investment. So we have about 56.7% left of debt. To go a little bit deeper into that, we have an existing investment of $1.9 million coming in the form of a 1031 exchange from a very passionate investor who's wanting to make her mark on the hospitality industry. We see RM Investments has about 13.4% ownership, and that's because we've been working tirelessly on this deal and we are incredibly proud of it and the unique value that it presents. We are saving that for ourselves. That leaves the additional $1.9 million, which can be either for our investors to pitch into or for us to take out in a loan.
Now, we are going to be keeping Rathbone Mansions as an independent property. And although many may argue that branding a property is the way to make money fast due to brand loyalty, we definitely agree to some extent. However, with the independent structure that we'll be having, aligning with that short-term vacation rental model, it really only makes sense for us to stay independent. By doing so, we're not only avoiding costly franchise fees, standardized operating procedures, and required brand renovations, but we're lowering overall operating costs. We see on the graph to the left here the different generations that have booked from a vacation rental site in the last year. If you notice, we see Gen Z and Millennial being the highest. This is important to note as this is the future of our hospitality industry, so notating their preferences is essential to understand where this industry is going. By staying independent and aligning with the short-term vacation rental model, we will be bringing unique value that these big brands just do not have, that will appeal to group travelers like Gen Z and Millennial who are seeking these unique lodging accommodations.
Now taking a look at our unique labor structure. As I mentioned earlier, we will be operating using a low interference vacation rental model, reducing the need for a traditional full hotel staff. You see here that we have 4 people on our model, and none of which are outside of the front office. We will have a full-time front office manager, a part-time assistant front office manager, and then 2 front desk agents, 1 full-time and 1 part-time. This will allow us to have more streamlined and cost-effective labor, and to focus primarily on managing our guests and guest services. A key advantage to this model is that the housekeeping costs are entirely covered through the guest, so we have a zero housekeeping cost strategy.
Now, when looking at online reviews for Rathbone Mansions, we used AI semantic analysis to further understand how guests experience staying at Rathbone Mansions. When looking at that, we saw many common themes such as the location being great and the historic charm of the property being amazing. All those things were to be expected. However, one common denominator that we noticed was the poorly run management style. We see on the screen here a bunch of issues that guests had and how poorly management handled that. Going along into common themes in Google reviews from Rathbone Mansions, we see guests complaining about the room conditions being poor and their value for their money being low. We are going to target these issues through our property improvement plan, like I mentioned earlier, and our chosen management company being a key factor in our success. That leads me into our management company. So we chose Casa. For those of you who don't know, Casa is currently running over 80 successful properties with the same operational model we are looking to implement with Rathbone Mansions. We see their total portfolio of their profit margin is at 59.1%, which is quite impressive compared to the 35.6% of U.S. independent limited service hotels. Now, when Martina walked you through our labor structure, I'm sure you all thought, where's their GM? That is because Casa will be providing us with one that will take care of our bookkeeping and our management needs. They also will be providing us with housekeeping services, a maintenance team, as well as a sales and marketing team to improve our digital presence. Another thing we wanted to disclose was that Casa will be taking 10% of our profit. Although this number may seem high to some, as typical management companies will take 2 to 3%, they are a full-service management company that is equipped with the necessary tools it takes to run an operational model successfully like this one. Casa isn't just managing properties. They are redefining hospitality. Their AI systems handle everything from guest communication and booking changes to predictive maintenance. This not only reduces labor costs by up to 97%, but also enhances the guest experience with personalized real-time service. They also have 2 similar properties in New Orleans that Martina will introduce you to here shortly. However, before we get into that, I just threw a lot of information at you about Casa in a short amount of time. So if I want to leave you all with one thing today to remember about this unique management company, is that it's really just taking the best of Airbnb and the 50 other channels that go along with it, and the best of hotels, and combining it into one powerhouse.
Now, as Chloe mentioned, Casa does have 2 existing investments already in the New Orleans market. They've begun making their mark, and it's showing to be very good. We have here the Lafayette New Orleans in the French Quarter, and then the Frenchman New Orleans just down the road from our hotel, which is right here. Having those properties existing near us puts us in a unique position to be able to streamline our operations, enhance guest satisfaction, and to optimize our profitability. This proximity allows Casa to leverage its existing local operations, management resources, and market insights at our hotel as well. Operating under the Casa management company is allowing us to minimize our operational and financial risks through their established expertise and resources. This investment is not a question of if it will make you money. It will. We're taking a visibly undermanaged asset, putting in our implementations to make it a performing one. We're taking a hotel that has historically run well below market average, taking it to the market average, and not only that, but also exceeding those averages. With our economically efficient labor model, we are able to cut costs 50%. Historically, our hotel has been running at about $250,000 attributed to labor every year, but with this model that we presented, it'll be $125,000 and a zero-cost housekeeping strategy. We do have a strong leisure and corporate market, as you can imagine, in New Orleans. Everyone is always wanting to come to have a good time, as Chloe mentioned, and to visit the historical and culturally rich place of New Orleans. However, with a corporate expansion happening to our New Orleans Convention Center, there's a $500 million renovation happening and a 1,000-room Omni Hotel being built just nearby. We believe, and we have seen through various studies, that the bookings for New Orleans and corporate events have increased triple-fold.
Now getting into our occupancy projections. We see in the first year that we will still be underperforming the market, but that's to be expected. As I mentioned earlier, we're gonna have some rooms out of order due to the renovation that will be happening. We then see us meeting market occupancy and then consistently exceeding that from 2028 and beyond. It's important to note that as a 29-room hotel, this is very feasible compared to our competitive set with rooms ranging from 50 to 200. A 29-room property just fills up faster, especially when paired with Casa's tech stack that drives RevPAR 161% above the market average. That means we're not only positioned to meet and surpass market occupancy, but to do so with greater efficiency and consistency than many boutique independent hotels typically experience.
Taking a look at our revenue projections, you can see that historically the hotel has been making between $600,000 and $900,000 in revenue annually. This is a little bit lower than what we would like to see, but we can absolutely implement our strategies and see that number take off. You see a slight plateau between 2024 and 2025, as that is when we will assume ownership and put our various implementations and strategies into work. From then on, you see that revenue increasing exponentially, up reaching $1.4 million by 2029. Now, this graph stops in 2029 because at that point in time, we would like to reevaluate a sale. We are very passionate about this project and this investment, and we would absolutely love to create a portfolio of very similar investments. But in 5 years, we want to take a look at those numbers. So in 5 years, we will have a 2.4 time MOIC, a 2.7% annual cash-on-cash return, and a 19.83% projected IRR. Now, I know this sounds extremely appealing, and you're all dying to get in on this deal. So if you have any questions, now is the time.
Thank you, everyone.
Thank you.
Great job, great job. All right, judges, questions. Where are we gonna start? Taylor, looking at you.
Okay, I'll kick it off. Lovely ladies, thank you so much. Great presentation. I had a little bit of concern about just the amount of revenue that you're producing from 29 keys, almost 50,000 per key. That's pretty substantial. And then how are your rooms laid out, and are they comparable to other Airbnb products, or is it really a hotel product that you're kind of filtering through the Airbnb channels with Casa?
Regarding your second question, our hotel is laid out typically like a normal hotel. However, we drew inspiration from a hotel in San Diego called City 24, and they were able to put more beds in a room to generate kind of a different market. So some of our rooms are just going to have a couple beds like a typical hotel layout, but to appeal to those group travelers like bachelorette parties, things like that, we're able to add more beds per room. That's going to go into the renovation, especially in those full service suites. We can add bunk beds, different size beds to accommodate those group travelers.
Mm-hmm.
Let me back up. Fantastic presentation, very dynamic. You referenced the other two Casa properties in New Orleans. Do you have a sense of what their operating margin would look like? I think you had the room count listed, but again, given the smaller key count, was that factored into your pro forma?
Yes, so those two properties are a little bit larger than us, but not by much. They're still very small, running off of an independent model, just like that. And I'm so sorry, can I have you repeat the second part of that question?
Yeah, did you have an understanding of the operating margins of those other assets and I guess sales support in general that you would get from a clustered set of hotels?
Yeah, so that management and GM and sales and marketing teams, those are all going to be shared as if there was a regional direction. So we would have the one GM for those three properties because we're all in the exact same market in the exact same area, targeting the exact same guests.
So we can really lean on those other properties to help us going forward because they already have that market knowledge to help our property succeed by teaming up with Casa.
Alex?
Great presentation.
Thank you.
Kind of going back to the same theme that I had suggested on the previous New Orleans opportunity, but one of the biggest, guest complaints was mold, dust, etc. This is a historic home or no?
Yes.
Historic hotel. Have you all investigated, gotten a property condition report, understood the bones of the real estate in which you're buying to then project into what you're anticipating for conversion / enhancement / opportunistic repositioning?
Yeah, so that renovation that happened since 2016 to now, it's been continuous over the years. It's been $675,000 put into it. That was kind of all the bones of the property. Right now, it's really just a facelift of like the wallpaper, furniture, and then those full service suites. When I say gut, I mean honestly just new appliances, things like that. But everything else, like internally, like AC, things like that, those are all good to go. And also, we had conversations with our broker, Len, about the same thing because we were worried about that. We saw so many reviews, and he assured us that that was up to par as well.
Mm-hmm.
I'm not sure if one exists, but is there an equivalent to Star for like Airbnb?
There is. Yes, it's called Air DNA.
Okay, so good that you know that.
We do know that. We haven't had access to it, but we are more than happy to take a look at that.
We've had access to the basics of it, and we are familiar with it, but to get those full reports from Air DNA, we needed like a full membership, but we are aware of it.
Because I think that's going to be more of your comp set than the hotels that you had listed in your presentation. And the second question is, based on your renovation, what type of rate lift are you expecting to get once you go through? What's the rate now, and then what do you expect that lift to be after the renovation that you guys undertake?
The rate right now is between $120 to $140 a night, so it's pretty stable, pretty congruent with what the rest of the properties are charging. But with a facelift, we're thinking new wallpaper, new furniture, better feel in that room. We want our guests to feel comfortable. So at that point, we're comfortable raising the rate to about 160 to 180, going up to different rates based on the market occupancy for that time.
Jenna.
Just second part on that, what would the occupancy be, do you think, when you stabilize?
Once we stabilize, we're hoping to stabilize at about 69 to 72%.
Okay, great, thank you. I was curious about the staffing model of what's there currently versus what you'll have. So I know you shared you'll have these several employees, but you'll have the zero housekeeping costs. How are they staffing it right now that's leading to this really poor customer service experience?
So right now they have a structure where during the daytime they have front desk agents, but at night they don't. So it's very much during the concentrated times of the day when the guests are scheduled to arrive, there's usually someone there. And if not, there's more of a digital check-in where you can check yourself in, grab your keys, and move on up to your room. But we are wanting to have a staff kind of along the same lines, but with no housekeeping. So their biggest cost is that they have housekeepers on staff all the time, keeping them there. And we just don't think that that's necessary with a property of this size and with the model that we're wanting to run.
Would the guest housekeeping payment cover common area housekeeping as well, or is that a separate line item that you'll cover the expense for?
No, it will cover the common area cleaning as well.
And that's going to be fully disclosed upon booking, just like Airbnb, so guests will be aware of that when they book with us.
Nice job, thank you so much.
Thank
you.
Awesome. All right, judges, great questions. What about from our audience? Scanning. No. All right, then I'm going to head to the Shad Talk table. We've got a alum, San Diego alum over there. So, all right, questions from our table over there.
Yeah, go Aztecs. Love to see San Diego State out here every year. I think, one question I had, we saw another group also presented a property in New Orleans. And because it was an older property, it had historic tax credits. Have you looked into maybe applying for historic tax credits? Or?
Oh, absolutely. We have done all the necessary research, and we know that it's through the National Park Service, and it gives us that 25% off any renovation cost, which is a pretty substantial amount. But we have seen that we're not currently on the list, so we can absolutely go forth with that. And it's a pretty easy process.
Thank you.
With using CASA for management, does CASA also charge you the Airbnb fee, or how does that work?
So CASA has its own website that we're able to market ourselves on. However, we still will be going that Airbnb, VRBO websites additionally to kind of bring in our guests. And over time, we're probably going to only end up needing to use CASA, but to start off, we're going to use that to kind of drive in guests and use that to our advantage.
And we'll be elevating our digital media so that we can try to drive our direct bookings. We're going to, for the first few years, use those OTAs because you have to, but at some point we're wanting to really wean ourselves off of them. And I know that's very ambitious, but that is the goal.
Awesome.
Thank you.
Great. Thank you very much, ladies. Congratulations.
Thank
High
you.
five.
Thank
Great
you so
job.
much.
Big round of applause. We're going to head off backstage. Alrighty, friends, you know the drill. QR code is up. Phones come out. We take a scan.
Thank you. I'm
vote.
gonna cry.
Collect your
And
thoughts.
then it's over with. Good job.
5%
You did that.
of your vote. And as you're doing that, we're going to give Chloe and Martina a quick second to take a deep breath, and we're going to head backstage to you, Thadral, for our backstage interview.
Awesome. Sorry about that, y'all. Forgot the mic was on. All right, so we have our SDSU girls. Historically, teams from SDSU tend to be either winners or they're highly favored. What is the secret?
I think our hospitality program, we're all just tight knit. I already texted all my group chats today and said, you better vote. And we also send out a school-wide email to make sure everyone's watching. All of our classes, too, for our program are only on Tuesday and Thursday. So since today's Thursday, it's perfect for everyone to tune in during class.
Amazing. I'm sorry, go ahead.
And we definitely have the most amazing support. Our director, Carl, he's in the audience. He has truly held our hands through this, and he has been our shining light.
He's definitely a celebrity around
That's true.
This was actually a very unique offering that you all presented today. I would love to know, what were some of the challenges that you may have come across, and how did you overcome them when you were putting this deal together, if any?
Well, there were quite a few. I mean, the hardest part was choosing the deal. We went months and months seeing these cookie cutter deals thinking, like this could work, this could be really fun, but we didn't feel the passion behind it. So we kept looking, and I have to say we were a little late in the game when we finally found our investment, but once we found it, we kind of knew that that's exactly the one we wanted to run with, and that we were passionate about something historical, something with a story, and something really different from what everyone else would
We
present.
really wanted something that could tell a story, and this was like a very low risk, high reward deal, and we were super excited to present it today.
I love that. And was there any other particular markets that you were, like it was between this one or another one? What was the secondary one?
Oh gosh, we were all over Minnesota. There was like a property in Minnesota. We were looking to do like a resort conversion. We looked at California at like a wedding venue conversion type thing, but nothing ever went anywhere.
Well, I gotta say, SDSU stays bringing interesting deals. So, congratulations, you ladies did a phenomenal job, and looking forward to celebrating with you guys later.
Yes, thank you so much.
Thank you so much.
All right, and next is our third raffle, which is a hefty amount of choice rewards points, and our winner is Jody Bryant. So thank you again, Choice, for your generous gift, and now hear a few words from them.
Only one woman for every 9.4 men holds investment or development positions in the hospitality industry, and the number of female hotel owners is not representative of the industry's diverse consumers. This is because female entrepreneurs have access to less financing than men and get smaller loans at higher interest rates on average. It's time to rebalance the scales of opportunity. As an organization who has been at the forefront of empowerment in hospitality for over 20 years, Choice Hotels is now investing more than ever to help women become a force in the industry. Introducing Hotels by Choice Hotels, a program designed by women for women to make the dream of hotel ownership more attainable for women worldwide. It's our mission to support and empower female entrepreneurs through dedicated training, turnkey solutions, and financial guidance. To reach underrepresented groups, Choice Hotels remains the first and only hotel company with dedicated personnel solely focused on extending opportunities in hotel ownership. And with more women investors, enthusiasts, innovators, and up-and-comers in the hospitality industry than ever before, there's never been a better time than now. Hotels by Choice Hotels, building equity through hospitality.
With our almost final Shad Talk, but not final Shad Talk. Back with my girls, my Shad alum. Jenny Jackman is back from She Did It, as well as Lauren from SDSU and Monica. Ladies, I think one of them said that Carl Winston was a celebrity. Do y'all know Carl Winston? Is he a celebrity? Everyone give a round of applause for Carl Winston. Ooh, Carl Winston. So Carl is the director at SDSU, and Carl has sent a team to SHaDPitch 6 seasons in a row. Okay? 6 seasons. I think San Diego State may have been the first registrant for She Has a Deal. Back in 2020. Do you remember Carl? I mean, he was back with me in the COVID days when our participants, they were afraid to talk to each other. They weren't sure if it was okay. Anyway, so great presentation, and those ladies were very sharp. I mean, their presentation skills were amazing. They even dressed the part. And really enjoyed their presentation. You know what I liked most about their presentation and them, in general, and the project is from the day that they introduced the project to me, they owned it. They were enthusiastic. They were so excited about this opportunity. I'm not sure if are they going to pursue it? I'm not sure. Do you know Lauren? Lauren's a SDSU grad, so yeah.
I don't know. I hope they do. It's a really interesting project. I wish I would have been able to work on it more with them throughout the process, but getting to just see how they've developed from, I saw their preliminary pitch to where they're at now, and they've made so many improvements, and it just seems like a really, really interesting deal.
So SDSU won last year, right?
Yeah.
Yeah, so, I mean, and they were like a hard second for so many years, and then took home the bag last year. It was
Very
very, I was excited for them, actually. I was excited for Carl. But let's talk about the deal a little bit. I mean, it's a different spin. I started with short-term rentals in Florida, and it can be a very healthy market. It can also be very challenging. I'm curious to know what you ladies, think about the short-term rental market. I mean, Casa wasn't available when I started in short-term rentals, and they've been emerging. They call me all the time trying to get my short-term. I have one left, and they keep trying to get it. But I'm like, why would I pay you? I don't know. So what do you guys think?
I had that question, and I had the question. Is this on?
There you go.
Oh, there we go. I also had that thought, and I was thinking about how what they were trying to do related to the data that they put up on the screen, and I was happy to see particularly the reviews and some of the things like that. So where my mind was going is that's challenging to do the renovations they're talking about that are kind of all over the places because the room sizes and the rooms are inconsistent. To do those renovations and command the bump that they're wanting to command, maybe without the rest of the data that is directly applicable, like a star report or something like that. I think the comp set was a little off for me. And the other thing that I was worried about was when you say, they were getting the high scores on historic and charming, and that sometimes means, scary and moldy. And so you just really got to get your arms around that. So that for me was a challenge that was inherent in their project. Other than that, it seems really great and exciting and a wonderful place to stay.
Yeah, I had that same thought. Like, overcoming bad reviews is really, really difficult, and it takes a lot of concentrated effort. So I was wondering what their strategy was for that. I do like this Casa model. I'm like, oh, that's unique. So I was glad to learn more about it.
Yeah, candidly, I had never heard of Casa before until I saw their presentation. Really unique. I think anyone would be scared when they see a 10% management fee. But I think it makes sense with how they've backed it up. And with, 29 keys, you got to find, upside anywhere you can. And cutting down on labor definitely seems like a good strategy there. I was curious to see, and maybe you have some insight to this as you kind of work through the process with them, Tracy. Did they run other sensitivities on management companies if they could do a soft brand? I'm not sure how they landed on Casa.
Right. I think it was too small for a soft brand. They didn't believe that they needed to pay the extra fees to affiliate with a brand. And so initially they talked about managing it themselves. And I guess they did a little work and said, well, you know what? Casa. Casa may work. But yeah, I mean, it's a tough market in the sense of there's so much supply. They do have a unique offering in this property. I would just be concerned about, the consistency by which someone would come every single week, because I don't see a business traveler per se choosing this particular property. But I would have to do some more research with Casa to see, what their following is like and what their demand looks like, because it's just a tough way. We have a smaller property, our vineyard property in California, and while it's wonderful on the weekends, we struggle, with the weekday because we're not getting business travelers. We're getting all leisure, and so after Monday, it's like Tuesday, Wednesday, it's crickets. It picks up again on Thursday. So it's a tough one to think about, but maybe the data that they found with Casa convinced them that the projections were realistic.
It seemed like certain types of groups, maybe not corporate, because I saw that when I reviewed their deck too, that they were wanting to capitalize on more corporate business, but tough to do without being a brand and tough to do with those crazy room sizes. But maybe there's other types of group businesses that you could pull in during the week and really expand your market so it's not so seasonal, a little bit more depth.
Well, they talked about Gen Z being one of their primary customers, and I thought they did a good job really kind of laying out who their customers were. And in that sense, those will be the future corporate business owners soon.
Right, but I think what a lot of people don't realize when they get into the hotel business because they see a unique and cute project or product is that a lot of that corporate business is locked in through different systems, and so even if the corporate person wants to come, they can't because they have to go to those hotels that are a part of their company's contracts, right? So that business group is big. It's big, and that's why Marriott, Hilton, Hyatt, they thrive, IHG, all of them because of those connections when it comes to the business traveler. Yeah. So wow, we have one more pitch left. I hope all of you are going to stay with us after this last final pitch to join us for the reception, the awards reception. Do a little bit of networking, have a chance to network with the women as well as other industry leaders that are here, but have the bated breath to find out who is going to take home either the bag, the purse, what do we want to call it, the $50,000 in deal equity, the big check. Yeah, the big check. We have a big check, but it's like real cash after the big check.
Yeah.
So we are giving out $50,000 to the winner of the Today's Woman, and they can invest, and they will invest, that $50,000 in deal equity into their deal, as well as we have another $50,000 that goes to the early careers that you're seeing pitch now. And if they're going to do their deal, if they're going to do their deal and they win, they'll have $50,000 toward their closing. And if not, if any of the early careers don't have a deal that they're closing on, we don't expect that they may close on a deal based on their experience and their network to raise capital, but they do get a $50,000 ownership interest in our SHaD Momentum Fund. And so they instantly become hotel owners with the rights and privileges of a hotel owner. Isn't that great? That's great. So the work that they put in is not done in vain. They're learning along the way, and every year I am so thrilled to see how they start green and not really getting this type of content in school per se, and then they show up here and pitch as if they've been in the business, for years. So it's just phenomenal to see that. So I'm really proud of creating something that is elevating women and educating them, and these are some of the best and brightest in their peer class, because anyone who would take time to invest in themselves in addition to all the coursework, and some of them have jobs and still show up and pitch that perfectly. I'm in awe, because I don't know, when I was in college, I don't think I would have been ready at all for it. So I'm real excited to be able to bring this program to everyone, and also to be able to invest in their futures as they become owners, or as they have the money to invest in their own deals. Now, one thing I want to mention, and I want to hear what you guys think about the process, is that the money, they don't just get cash. So we want to be good stewards of our resources and our sponsorship dollars. So the money gets put in escrow until they find a deal, so that we don't just willy-nilly give out $50,000. So it stays in escrow. When they find a deal, then that money goes in to invest in that deal. Any thoughts on that?
Well, I think that's a prudent thing to do, and I would just say, as one of the coaches for some of the teams, I've just been thrilled with what they've been bringing at their age. They're just phenomenal.
Yeah. Lauren, any comments having come? Oh, go ahead, Jen.
I was just going to say the escrow thing. It keeps it compelling. It keeps them in it. It keeps them looking and talking about it and being a part.
Yeah.
And with any of our deals, we would put our investors' money in escrow. So it's just common practice.
Yeah, absolutely.
Yeah, like you said too, I think you spend so many months preparing for this day, this moment to get up and do your pitch, and so after it's, sense of relief, but then you also lose a little bit of momentum. So I think, having that money set aside, knowing that they have to continue to work for it, even if one deal doesn't work out, which is typically, the case. You don't always win on your first try. Yeah. But just to keep them motivated is a great strategy, I think.
I often get a call and they'll say, hey, can I invest half of my 50, and this will be for the Today's Woman, in such and such's deal, right? So the women are investing their own money as well as their prize money in others' deals. So with the Today's Women, if they do not close a deal within 3 years, it automatically converts to the fund that will invest in other projects that are originating from SHaDPitch for the women who are leading those deals. So it's real exciting to just see the sisterhood and the community that's being built, and just the knowledge and the competencies that continue to grow as we continue with this program. So thank you all for supporting us just by being here, by buying a ticket, by making a donation, and of course our sponsors for sponsoring and believing, in this. I mean, I have to definitely, give a shout out. Shout out's like old school, right? We don't do that anymore. I don't know. It's a shout out to Marriott and Hilton and Hyatt, who believed, as founding sponsors, believed in the vision and contributed generously to the mission. All right. Thank you.
Awesome. Now it is time for our final presentation. We've got another dynamic team from Howard University, Canosa Estate.
Marshall Kennedy. And I am Associate Ernie, and together we are Canosa Estate. During the process of being with my partner has been nothing short of amazing. We have learned each other's strengths and weaknesses. That first spark for the Owner Hotel honestly came from my grandfather in Monrovia, Liberia. He had like a little small apartment complex, and the first time when I went back there to visit, I was just very fascinated. One day, I will create a hospitality brand that will develop international hotels in undeveloped countries or all over globally and help grow their economic that way. Shad has really helped build my confidence in that, because I've met people who have started from like the bottom and made their way to the top, and now they're just speaking in rooms that I can dream to speak of. It's about ownership, access, and like reshaping the landscape of hospitality. I did this and wanted to learn more to build and to prove that like young Black women and women all over the world belong in spaces such as being owners, investors, or even decision makers. It's taught me the knowledge it takes to open a hotel, like from searching the properties, to finding investors, to raising capital, to knowing what a good property is, to having location. I've grown into being the woman I truly see myself as, honing in conversations and understanding that a process isn't a start and end, it's a journey.
Get ready as Canosa Estate reveals its boutique hotel conversion strategy in the heart of Nashville. Please welcome rising hospitality leaders Marshall Kennedy and Isosa Aragi.
Hello everyone, my name is Marshall Kennedy. And my name is Isosa Aragi, and we're Canosa Estate from Howard University. Today, we'll be introducing and navigating you all through our property, which we intend to acquire and rebrand. We're excited to show you how this property taps into a rapidly growing market. Today, we're going to introduce you to our investment opportunity. We're going to give you some key metrics. We're going to go over our branding strategy, and we're also going to end with our exit strategy. Let's get started. Now, before we dive too deep into our property, let's talk a little bit about our location in a city that we all know and love, Nashville, Tennessee. Nashville is located in Davidson County, home to 1.35 million people, including yours truly. It is also known globally as the music capital of the world. In addition, according to a recent CBRE survey, it has ranked Nashville as number 4 among U.S. metros for property investments. And hey, tourism is booming. Visit Music City has stated that over 17 million visitors came in 2024. This is 9% from pre-pandemic rates. And 2027 is predicted to have over 18 million visitors, which to me is no surprise because it's home to Nashville International Airport, or BNA, which is also known as the fastest growing airport in the nation, having new airlines en routes every month. With iconic venues like the Bridgestone Arena, Grand Ole Opry, and universities like Vanderbilt, Nashville is thriving, and we're ready to grow with it. Our property is located in East Nashville, which is very close to the demand drivers that my partner just mentioned. Less than 10 miles away from what the markets say are the top tourist destinations in Nashville, this makes our property a value-add property. Our property is a Red Roof Inn currently. It has 122 keys, 5 miles away from downtown Nashville, sitting on 3.27 acres of concrete construction. Our property also has 600 square feet of meeting space. We're planning on taking this Red Roof Inn and turning it into a Spark by Hilton. Spark by Hilton is a part of Hilton's premium economy brand. With 150 million members and a global search engine, we plan on turning this Red Roof Inn into a branded asset. Comfortable, stylish, and essential amenities. Spark by Hilton is affordable, has quality, and is stylish, which is perfect for the value-driven traveler.
Now, let's talk a little bit about our investment summary. Our total investment is around $10.85 million, which roughly breaks down to just under $89,000 a key with a 122 key asset. This shows the high barriers to entry within the Nashville market. Keeping that market in mind, the following projections are as follows. We have a purchase price of $7.11 million, which we believe will capitalize on the property's potential and also position us for future returns. Next, we have modernized our hotel and created and outlined a property improvement plan of $2.44 million, which is roughly $20,000 a key. This is after consulting a Hilton expert in enhancement developments and qualities, specifically Sparks, in order to enhance quality. Next, we have our closing costs at $1.3 million. This includes legal, financing, and due diligence pre-opening reserves, which gives us to just under $11,000.
After our 10-year hold, we're projecting a 15% cash-on-cash return, generating income from day one. Our property is located in a federal opportunity tax zone, which means that after the 10-year hold, all the capital gains will be tax-free, which means with a 2.5 return on investment, we'll be taking $1 million and turn it to $2.5 million, with a 2.44 allocated for upgrades. And we're sitting at a 15.73% internal rate of return.
Now, let's talk a little bit about our capital stack. Our capital stack is specifically structured to ensure a strong, balanced investment approach. First, we have our senior loan from Live Oak Bank. This makes up around 40% of our capital, which is totaling to around $4.3 million. Second, we have our 25% SBA 504 loan, which is totaling around $2.7 million. This is coming from bank financing and the CDC, or the certified development company that the bank may choose at that time. We chose this because of lower interest rates and higher payback periods. Third, we acquired a 15% CPACE funding from Pathway Lending. This is around $1.6 million. This is in order to ensure financial properties to enhance energy efficient incentives. Lastly is our 20% equity. This is from Opportunity Zone funding, investments, and savings, which is totaling to around $2.1 million. This is all in order to ensure that we have a strong capital base in order to drive us within Nashville's competitive market. Now, we're going to talk a little bit about our management company. We chose Chartwell Hospitality because of their high success rates, their local experience and knowledge, and their experience with Hilton. Represented on the screen, you can see that 12 of their properties are represented by the blue dots within and around the Nashville area, with the purple dot being our property. To tell you guys a little bit about their success rates, they have helped manage a Hilton property in downtown Nashville, helping them increase their RevPAR by 15% in just 12 months. And this is all while managing 40 nationwide properties. We believe with their strong focus on operational efficiencies,
staffing trainings, and guest satisfaction, that this will help us position ourselves in order to meet the high demand and serve an underdeserved market.
Our aspiring competitive set consists of the Hampton Inn and Suites, the Fairfield Inn and Suites, the True by Hilton, and the Holiday Inn and Suites. Though our competitors do have their own advantages, we do still believe that Spark by Hilton will be differentiated and will set us apart. After talking to some Hilton representatives, we also know that Spark by Hilton has already surpassed certain hotels in our competitive set.
Now, before we talk about the future, we have to look back in the past. Just like the broader market, our hotel was hit significantly by the pandemic, with occupancy going from 60% to 35%. Now, in 2020, occupancy is around 38%, with ADR being $75.02. Now, while these numbers may seem low, here's some context. In 2021 from 2023, Tennessee State University had a major housing crisis, using our property as student housing. This essentially lowered rates and distorted our historical hotel projections. The upside is that the market is still growing with an ADR of $103, and we're already seeing recovery. We believe that through our repositioning and our conversion, we can grow within this market as well.
Based off our financial model, we're projecting an upward trajectory through the decade. Starting with year 2 to 4, we just launched. We're expecting to meet market performance at an average daily rate of $124. Moving on to years 4 through 8, we're expecting to exceed market expectations at an average daily rate of $148. At years 8 through 10, we're expecting to hit stabilization. Though this may be affected by external things such as Nashville's tourism, inflation, or incoming major events, we still believe with our strategic positioning that we'll be able to stay consistent with revenue and demand. Our projected occupancy, starting with year 2, we're expecting it to be at 60%. Moving on to year 4, we're expecting to almost touch the market average at a 74% occupancy. Then at the years of 6 through 10, we're expecting to hit stabilization and surpass the average market by being at a 79% occupancy.
Within our 10-year holds, our 10-year figures are just showing. We have the occupancy of 79%, ADR of $148, which helps us equal our RevPAR to $117. We believe that with these metrics, we are able to project an NOI of $2.02 million. We also believe that these metrics allow us to be a successful reevaluation. With our cap rate of being 16.8%, we believe that we have a conservative projected sale price of $12 million. Our investment from converting our Red Roof Inn into a Spark by Hilton in a dynamic market like Hilton allows us to have a high value asset for investors.
Thank you guys so much for your time and attention. We not only believe that this investment opportunity will have financial returns, but we also believe that it will open the door for women like us to enter the hospitality market. Thank you.
Thank you.
Great job. You can scoot over a little bit. Oh, you keep that. You keep that. Awesome. Great job, ladies. All right, we're going to stay up on stage for some questions from our judges. All right, who are we going to start with? Michael.
So you're, let me back up. Great presentation. Fantastic job. Thank you for presenting. Your comp set hotels, the ones that you're benchmarking off of, the closest hotel is 3.3 miles. I think the furthest was 7 or 8 miles away. Do you have data of closer competitive hotels? Nashville's such a dynamic market with various submarkets. Hospitality is a street corner business. I think a better benchmark might be something that's a little closer. Have you guys studied the dynamics of supply and demand in your kind of immediate neighborhood?
Yes, we did. Like, those are the ones that we put as the most competitors, but we did look at the ones that are closer because there are a few Hampton Inns and Fairfield Inns that were a little bit closer, but we just chose to use those locations because they had similarities in terms of what we were trying to bring.
Is there, I guess, how are the ones that are closer performing? What does the RevPAR look like for the more proximate hotels?
I thought you were going to say something.
No, so kind of going back to your also like the same question, we looked at the MPI, the penetration index for the market, and we looked at our occupancy divided by the market's occupancy with one within when we had our Red Roof in, and then two when we converted our into a Spark, and this averaged around 5 to 6%. RevPAR was roughly like around 100 and like. Well, it depends. If you're doing the Spark by Hilton, then it's roughly like $120. If you're doing the Red Roof Inn, then it's roughly, again, the $103 that we estimated earlier.
Taylor?
Sure. I noticed in your capital stack you didn't have any key money from Hilton. Did you guys get to discuss that with the brand conversion? Obviously, Spark, they're trying to expand a lot nationally. And then did you think of any other kind of economy brands that would have fit in this market and compare that?
So we did talk to a couple of the Hilton experts, and we asked for key money. We're like, hey, because it's our first portfolio. And so we had said, do you have any key money? They were like, no, unfortunately for this property we don't. So that's why we kind of talked to someone at Paramount Lodging in order to break down our best debt structure, which is why we also don't have mezzanine debt on there or the SBA 7A. Can you refer back to your second part of your question?
What other brands did you think through when you're going from the Red Roof to the Spark?
Yes. So we thought about a couple of brands from like Marriott or maybe IHG because they also kind of have a lower, I would say, entry market compared to Hilton. However, when you look at the Spark, everyone's always talking about the demand and the supply in Nashville. Everyone's like, supply is coming. How are you going to compete? But no one's talking about what type of supply is coming in Nashville. You have luxury brands and boutiques, which makes up around, I think the average was 60%, but there's 40% of that market that's being untapped into. We believe that a Spark by Hilton, which is that premium economy, which allows people to have that feel of luxury, but not breaking the bank and making sure it's cost efficient in order to provide them. So that's why we chose the Spark.
Great.
Great job, ladies. Thank you so much for the
Thank
presentation. So I noticed that you have occupancy rising as well as rates 60 to 79% from current to stabilized. Can you talk a little bit about any drivers that are coming in this submarket of Nashville and how you think your product will be able to drive such a great and strong performance?
Yes. Looking into research, we were able to see that the Super Bowl, as long as the annual country music awards and such are coming to Nashville, along with development of the BNN National Airport. So we're expecting those to drive occupancy as it will bring people into town who are trying to use Nashville as entertainment.
And if I could add on to that, there's a couple of things we didn't mention because we only have 15 minutes. But we have these packages called stay and play packages to talk about a little bit about risk mitigation. In the South, if you're from the South, there's usually not that much public transportation. So instead we are providing them shuttles and guidance into those type of properties in order to gain that occupancy and that rate, while also leveraging Hilton's GSE systems and their brand and their loyalty base as well to help them grow in the ADR and occupancy. If you're talking about the East Market, Nashville in specific, well, I don't know her like that, but Miss Parton Miss Parton is saying that she's bringing a little bit of a musical into the East Nashville area as well as the whole Tennessee area as well. Sorry.
Also ask for an introduction to Dolly Parton if you're on a first name basis. Alex, Brian.
Really well done. Congratulations, and obviously for being up here and putting yourself out here. Did you have a conversation with Red Roof, or at least understand how much remaining term is contractual on that agreement? And then the second component to that is allowing for conversion and what that cost, or I guess I wouldn't say legal, but the contractual obligation that is in current with the existing in place agreement.
Yeah, sure. Yeah. Well, we talked to Red Roof and we were able to tell we can convert. We would have to pay a certain amount in order to convert. But as for conversions for Hilton, especially a Spark, we don't have to knock down any walls. It's more of moving this here, changing this out and this out. So when we explained that to them, it was more of it's not the same. We wouldn't have to pay the same rate as if we were trying to completely convert the hotel. And you want the second part of the question?
Yeah, sure. So I was talking on the phone with the seller. We're talking about a little bit about the purchasing price and like what they're interested in. Like, why are you selling? Like, is there mold? Is there rats? I need to know. And so they were talking a little bit about how they're coming up to about a 1.5 year like end rate, which is why they're interested in selling in the first place, and they kind of want to expand their portfolio in something else. So with that 1 year, we assumed that with our average of like 7 to 8 months for after the licensing agreement, that will kind of factor into that. And then once that happens, we've already passed kind of that circumference. It's like she said, we won't have any like conversion prices for that.
Yeah, and I have a question too. First, great job as well. Appreciate your energy. I have a question about branding and then performance within the market, right? So when you say premium economy, that kind of straddles economy and mid-scale, right? In between. So did you guys think about ordering or trend report or star report to see what the mid-scale product, how that performs, and how the economy product performs to kind of know from a positioning standpoint? Because that box, if I'm not mistaken, was a purpose-built Hampton. So that is a that is a mid-scale box. That was so the bones are a mid-scale or upper mid-scale box. So that could be an opportunity at $20,000 per key. Could you go upstream to mid-scale or upper mid-scale, given that's what the building was purpose-built as? So just curious if you ran any numbers on mid-scale performance, economy performance to kind of figure out the best brand positioning.
Yeah. I'll take that. I'll answer that a little differently. So as you can see, our cap rate was around 16.8%, and we got that by our projected NOI divided by our sales price of $12 million. And that essentially got us our cap rate. However, that's not the branded cap rate within Nashville, Tennessee. So for mid-scale, that average in that range is usually around 6 to 7%. And then, premium is 6 to 7%. And then economy tiers are usually around 7 to 8%. So having the 16.8% is more of a conservative rate, which allows us to open the door in order for a higher investment. So we did look at the STR rates, but that's just kind of what we projected within that market. Did that answer your question? Thank you.
Awesome. All right, great questions, judges. Looking out to the audience, do I have any questions? I don't have any. Great. I'm going to go to Tracy and the Shad Talk table. Do we have any questions on at the table?
I'll take a question. So I'm surprised, ladies, not when we first talked, but when we talked once, you were looking for a red roof. So I was surprised that you were converting a red roof. And had you considered just keeping it a red roof? I thought it was performing pretty well as a red roof. And I know my friend Lena Patel with Red Roof is probably wondering, she's in the room somewhere, wondering why would you convert it and why not, keep it as a red roof?
Just looking at our historical data, personally, we thought the Red Roof Inn could have been performing better, if that makes sense. And so we wanted to expand on the fact that knowing that the Red Roof Inn is an economy hotel, the type of guests that they were already serving, we wanted to hone in on that while expanding the market. So we wanted to make it premium, where we could bring in travelers who are looking for cost-friendly, but still a stylish, nice vibe. So that is where we really came from with the spark, and yeah.
You might want to talk to Lena before you leave today, okay?
Okay.
Awesome.
I do have another question. Sorry, Suraj.
Sure.
Can I ask another question? I was looking at your underwriting. I noticed there's a occupancy dip in year 5. Instead of stabilizing, you have projecting a dip in occupancy. Is there a reason why? It's like in year 5, there's 8% or 9% dip in occupancy projection.
Sure. So there's many events coming within year 5. So there are events such as we mentioned, the Super Bowl, Dolly Parton's having her theater projections as well within our market. And there's also, 4 other developments happening as well, which we assume that it's going to impact occupancy just a little bit, which is why there's a slight increase and then a dip going back to normal markets once that year is over.
Great.
Thank you.
Awesome. Another big round of applause, ladies. Thank you. Good job. You can head backstage. Great job. All right, Canosa Real Estate, great job. All right, you all know the drill. QR codes are up on the screens. You're going to pull out your phones, take your vote, collect your thoughts. As a reminder, this is worth 5% of their overall score. And we're going to let our team back there get situated. Tejal, I'm coming back to you for a live after pitch interview.
All right. So, last
pitch of the day.
Yes. Best for last.
Right, best for last. Thank you.
Yes. Okay. Well, you're our second team from Howard, so
Yes.
and I'm very interested to know. And we're not gonna, shade anyone, right? But why didn't y'all partner up together instead with the other team?
Yes. Well, firstly, Shad has like a 2-partner minimum, so we can only do 2. Because if we could do a team of 4, y'all would just be 4 enough on that stage.
Yes.
But also, yeah, it's been a great journey with 2 teams. Honestly, being able to like pitch to each other, talk to each other, and really like get real feedback. I feel like it's just friendly competition at Howard. That's the culture we love. Yeah, we love pushing each other to like who's gonna do the best, who's gonna do the great. It just makes us all perform at our best. Truly.
Yes. I love it. So then, how did this partnership happen?
So essentially, me and Asosa are in the Marriott Sorensen Center for Hospitality Leadership at Howard University's Business School. I always see Asosa around, so I told her, I was like, hi, like, how are you? I would love to, like, talk to you. Then we came down to she has a deal. I heard about it last year, and I was like, oh, I'm not ready. Like, there's no way that I can do this. I wasn't ready this year, but now I'm more prepared, and I asked her, and I was like, are you interested in this? Like, what are your interests? And we talked about it, and we decided to apply together.
Yeah.
I love that. And, I'm so glad you brought up that point because a lot of times, sometimes there's like imposter syndrome, right? We think that we're not ready and we don't find out how ready we are until we push ourselves out of our comfort zones.
Right.
So what would be your advice to anyone who's watching right now, whether they're in the audience or they're back home, if they're considering getting involved with SHAD, what would you recommend they do?
Not to quote Nike, but just do it. Do it. Do it afraid. Do it scared. Do it alone. Do it happy. Do it sad. Because at the end of the day, the experience will pass by, but the memories you have will last forever. So you would rather live with like, I can't believe I did that. That was so great, or that was so scary. At least I like passed this. Than rather like, oh, what if? What if? What if? Because the what if will linger with you, but the memory will forever make you smile in the end.
Yes. And that was good.
I'm glad this is recorded. Amazing. Well, again, I've mentioned this plenty of times today. I'm going to say it again that being a part of SHAD is a sisterhood. And of course, when you step off that stage, you are part of that sisterhood for life. So welcome to officially Alumni Life.
Yes, thank you.
And I will catch you ladies later at the reception.
Perfect. Thank you guys.
All right, awesome. So now is the time for our final raffle, which is for 95,000 Wyndham Rewards points. And honestly, I was thinking about stealing one of the bags, but yeah, we won't do that. So it's a pretty good deal. So with that, final drum roll, please. Love this energy. It is Ann Sesso. So congratulations, Ann. And again, all the winners of the raffle, please, if you're here in the room, please go to the registration desk here in a few minutes. And then if you're watching from home, we will reach out to you personally to get you your prizes. And so now, a final word from one of our incredible partners who's been there with us from day one as well, and the incredible trailblazers behind the Women in the Room program, Linda.
So what our team has done is put together a program that will help women figure out the how and why to get the project into the ground, and then also how to operate the project once it opens.
We are back for our last SHAD Talk of Season 6. We've had 5 early career amazing pitches. I'm with 2 of my SHAD alum, Ebony Jones, winner of 2024, and Crystal Key, you were early careerist from 2024. But we have a special guest at the table, my dear friend, Amari Head. And I don't know your exact title, but Amari leads the Marriott Sorensen Center. What's your role here? And tell us about these teams and how you got 2 teams to enter SHaDPitch this year.
Yeah, so I
hear him.
Swap it out. Yeah, go ahead and applaud. Check. Perfect. Thank you. So recently started in this role. My background been in hotel brokerage and advisory, transacted over 300 hotels, totaling about 1.5 billion cross country. And one thing that I've noticed throughout it is really the access to information. There's been a big gap from helping this industry be a lot more inclusive on the ownership side. So where other place than higher education to really give back and help folks get on the on-ramp significantly sooner. She Has a Deal, it was something I believed in, it made sense, helping folks get educated, helping people not just get informed, but again, educated with actionable intelligence, and then you have an opportunity to come out here and demonstrate it. So being in this leadership position, number one. Number two, having incredibly phenomenal talent to work with already and just be able to connect the two. So for me, it was an easy understanding. It made sense. It was the quickest path to success, and we really appreciate the nurturing and the development that Shad has given these students since the beginning of the year. So it's been an incredible journey.
Thank you. So let's get down to the pitch. So I have to say this, but they left 4 minutes on the table, right? And I had so many more questions. They left 4 minutes on the table. So did you coach them? Because you had two competing teams. Tell me, like, the preparation and how because I know you're very knowledgeable in the space.
I'm just a guy. No, in terms of leaving time on the table, when you've done the job, you've done the job.
Oh, well, okay.
Right? And when it's done, you can drop the mic confidently and you can exit.
Okay.
So in this situation, we really want to make sure that they confidently understand the material, they can deliver the material, and it was proven in the Q&A.
Okay.
Right, that they knew the material, they understood the due diligence, they were able to ask the questions and really not just skirt around it, but making sure that they had the confidence for that. So whenever we go through the pitch, is just making sure that folks really understand, again, the numbers, and then also understanding the industry and kind of why we're taking this approach and what this really means to be in this room and be in this moment and be appreciative of it.
Well, let's ask Ms. Jones. Was it a drop the mic? Did they not need to leave that 4 minutes? Or it was okay to leave that 4 minutes on the table?
I'm a little biased because I did coach Caden in
Brooklyn.
So I'm going to plead, on that. But I think they did an amazing job. I love the tag team. I wish I had a partner when I pitched. And I think they worked really well together.
How about you, Crystal?
Can't put the pressure on me now. I love everybody. I think it's great. The only one comment I will say is the comp set. It's with the further away. That was my only concern, but I do understand why they chose the comp set. But overall, great presentation. I know that we love Red Roof too, but Spark and Red Roof, we love both of them. But it's a great conversion. I think it's a great location. And I think they did a great job.
All right, well, okay. So we had 5 pitches. And should I put you guys on the spot and say which one was your favorite? Or should we wait? Okay, all right, I won't. Okay, so 5 pitches. It is tough. I always have my ranks, but I could go a couple of directions. I won't talk about it because they're all my babies. So I won't go that. But there is a second prize for the early careerists. They'll win $5,000. It's $2,500 per team member. So there is an opportunity, and they get that cash. And that's really to reward the effort that they put in and the work that they put in today. But don't forget, we still have our Viewers' Choice Award. So if you have not voted yet, I know Siraj will probably tell you more about that, but we really want you to vote and give feedback. The women really enjoy the feedback, especially the early careers, because they're growing. They have plenty of time to just really excel in the business. They're like 20, 22, 21, 22. Like, if I only was pitching like that if I even knew I could own a hotel in my 20s, I would have been not sitting here right now. But nevertheless, I love being here. I love being able to coach and mentor the women and just share the knowledge that I've gained over the years. I guess it's time for us to move on. I'm standing between everyone, drinks and food and award announcements. So, Suraj.
Thank you, Tracy. All righty, what a phenomenal showcase from our early careerists. How about a big round of applause for all 5 teams? You know, I can't wait to see where these future leaders go. I'm sure that we will all be working for them very, very soon. Today has been filled with bold ideas, powerful pitches from both today's women contestants and our early careerists. A true celebration of passion, creativity, dedication, and drive. My friends, this is the very spirit of She Has a Deal. And if you're in the room and you're feeling inspired and compelled, here's your chance. Applications for SHAD 2026 are now open. I think there's going to be a QR code that will come up if you want to scan that and get more information. But the SHAD team will also be following up with everyone for more details on that as well. And before you leave, be sure to check the SHAD swag table in the lobby to pick up some new merch for yourself and celebrate the movement. And now, to close our fantastic pitch, please join me in welcoming back to the stage the visionary behind She Has a Deal, its founder, Tracy Prigmore.
Thank you. Everyone give a big,
thank you.
grand round of applause for Suraj. She did an amazing job.
Thank you.
Thank you very much. And also our judges. Everyone give a round of applause to our judges who sat here having a very difficult decision here. I mean, I'm glad I'm not sitting where you guys were sitting because those were some amazing pitches. I'm always so proud of the women and the work that they put in and how well they show up and pitch here. So again, thank you to our judges and your feedback that you gave to the women. They will take that and really grow in their professional careers. And to our sponsors, I mean, we cannot do it without you. There is no way possible that these women could get the level of education that we're able to pour into them. You participate financially, you participate with data, with knowledge and wisdom. And as you noted, many of our sponsors appeared in the pitches. So that networking that they do and the knowledge that they're gaining from the sponsors is really valuable to them. And many of them will probably be working for sponsors next year. We've seen a number of our early careers go on to work for some of our sponsors and others in the industry. So, it's been a day.
It's been a day.
I just want to say to our contestants, your passion, creativity, and courage were all on full display today. Each of you brought something powerful to the stage, and you are the reason She Has a Deal continues to inspire and transform the industry. To the entire SHAD team, we have a big team that helps to put this together. We thank you for your tireless work behind the scenes. There's a lot going on behind the scenes that you guys don't see from August until today. So we really appreciate our SHAD team, their dedication and their brilliance, the power for the movement. And finally, a huge thank you to Suraj again. I have to just say that again, because Suraj came to me and said, hey, do you need an MC?
I think I said if you ran out of all your options, I would gladly. So I think I was like number 7 on the list. No. We were on our call, and I said, listen, if you ever need it, I'll get on a plane. I'll do anything for Tracy.
Absolutely. But see, Suraj puts on a great event, RTRX, in Columbus each year. Tell them just what that is.
Yeah, no, thank you. So RTRX was founded by Jimmy Merkel and Rockbridge. Rockbridge is building hotels, designing hotels for the last 25 years, really changing the way businesses and individuals convene over 4 days of programming. designed to make everyone better in their life. And so we give people a chance to come do business, invest in themselves, invest in their team. And then the social enterprise model of RTRX is we put all of our profits into cancer research. And hundreds of our participants get on a bike and ride anywhere from 25 to 200 miles and raise millions and millions of dollars every year for cancer research. And so
it's a phenomenal event.
It is.
Yeah, I had a chance to participate. Tejal, everyone give a round of applause for our Tejal, who was doing our backstage interviews. Did she do a wonderful job? Yes, Tejal. Tejal was on the stage in 2020 when we had masks on.
Okay.
No. So it's great that she has stayed connected with She Has a Deal and continues to contribute to the women. So we really do thank Tejal and again, everyone else that participated. I look forward to seeing all of you. Actually, I want a round of applause to all of you who sat through the amazing pitches, smiling and staying engaged, because all of the participants, they need those friendly faces when they're pitching, right? You don't want to pitch to nobody in the audience, right?
Well, I think everyone else got smarter too.
Right.
So they gained a
Did
little.
everybody get smarter? Did you get smarter?
I sure as heck did.
Clap your hands if you got smarter. Not enough. Because our goal is to, have you learn, connect, and then my favorite, to invest with us. So we'll see you guys soon over at the reception. Suraj, you want to close it out with the instructions about what we're going to do?
I will.
Okay,
Thank
I'll see you guys at the reception.
A big round of applause again for Tracy Prigmore, everyone. It's been such an honor and a joy to be here. I met Tracy a couple years ago and was just blown away by the work and the vision. And she said that if she knew when she was 27 years old that she could own a hotel, she wouldn't be sitting here today. I actually disagree with that. I believe that Tracy was meant to do this and was meant to build this ecosystem for young women, for women in the industry to grow and to step into their power. And so another big round of applause for Tracy and her vision, please. This is, as Tracy said, a true testament to what happens when we believe in women, we invest in women, and what's possible when women are empowered to lead and act and invest. Tracy thanked you all, but I want to thank you again. You all, whether in person or virtually, giving of your time and your energy to support everyone. You are committed to a more inclusive and innovative future for the hospitality industry, and we can't thank you enough. Now, before we break, you know what I'm going to say. There's a QR code on the screen over here where you're going to vote for the Viewer's Choice Award. And so you've got just 30 minutes left to do your voting, and every single vote that you make and you put in amplifies the voices and the visions of each and every single person that presented in these incredible women. After you vote, we will take a nice, quick 30-minute break to refresh and recharge. We'll return for the awards reception in the innovation area, where we will celebrate all of our contestants, and we will reveal both winners for the Viewer's Choice and for the Early Careerists, both receiving $50,000 towards their deal. So ladies and gentlemen, we'll see you outside in the lobby for a quick happy hour, and then we'll be here for the awards ceremony. Thank you very much. Tracy, do they deliberate? Are they deliberating or? Okay.
Hi, everybody. Just want to give you all a little bit more instruction about what's coming next, okay? So, in the room, our judges are going to go deliberate. They've got a little bit more work to do before they can have a drink. The rest